rest. But and it's coming down to one very simple fact: the markets don't like uncertainty, and right now we know how to deal with this. It hasn't become a widespread problem yet, but just give it a few weeks when the virus spreads to the south, because that could be a bigger factor.
I agree. All right, guys, thank you so much. Great market follow through in this first trading day of the year. Kriti Gupta will be back a little bit later on. Vince Signorella, global macro strategist.
Let's do the Bloomberg Business Week bite of the day. It's one number that tells us a lot. Today's number 308,600. You know where we're going.
Tesla delivering that amount of vehicles worldwide in the fourth quarter, smashing the previous record for the electric car maker, setting a capstone on a year in which the company joined the exclusive 1 trillion market valuation club. It's above that today. Better than expected results came out yesterday, pushing Tesla's total sales for the year to more than 936,000. That's up 87% over 2020's deliveries.
Shares of Tesla, by the way, higher by 11.8%.
That's one of my gainers.
Oh, that's a good one. Let's hope it stays higher for your sake. Let's get a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey, Nance, Happy New Year.
Hey, thanks, Tim. The FDA is now making booster shots of the Pfizer vaccine available to children 12 to 15 years old. Marcus Smith is a parent in suburban D.C. and says he couldn't be happier hearing the news.
I will be the first one in line with my 13-year-old. This is fantastic news. You know, everybody in the family is now vaccinated and boosted, and for him to now be, added to that is fantastic, and I feel, so much better.
The FDA is also authorizing booster shots for every Pfizer recipient 5 months after their primary vaccination, not 6. Senate Democrats continue to look for a path forward on President Biden's economic agenda.
Senate Democrats will continue negotiations on their version of a tax and spending bill before midterm election campaigns begin. Senate Majority Leader Chuck Schumer says he'll bring a revised version of the $2 trillion spending package to the floor for a vote this month. The House version includes billions for climate change, a year-long extension of the child tax credit, a federal paid leave program, and support for preschool programs nationwide. But Senator Joe Manchin says he won't support that version. In Washington, I'm Amy Morris, Bloomberg Daybreak.
The 12-person jury in the Elizabeth Holmes trial says it is struggling to reach a consensus on 3 of the 11 securities fraud charges she faces. They outlined their stalemate in a note to the judge in the case. A unanimous verdict is required to convict or acquit Holmes. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master, Tim Stanovic here in our Interactive Brokers studio. So, I kidded that I thought, COVID would be over, but it was just remarkable to once again see COVID be the top of so many different newscasts, and understandably so.
Well, you weren't the only one. A lot of the return to office, so-called RTO, and the lexicon of 2021 and 2022, the people who made those decisions thought that COVID would be in the rear view when they said, hey, January, you're coming back to the office.
Not so much,
No.
right? So we've got New York City offices empty again. Manhattan's office market has seen a rebound in demand, but the surge in COVID-19's Omicron variant could delay further progress. Leasing, we did see jump in the fourth quarter, the most in about 2 years, up 21% for the previous quarter. That was a report out by Seville's research. Much of the demand driven by new agreements. It was a sign that tenants are committing to long-term plans for offices in the future, according to the brokerage. But yet, we shall see.
Yeah, we should see, because we're seeing more and more companies, especially the big banks, push back returning to the office. Last week, the big news was Goldman Sachs,
which has been very aggressive about getting everybody back.
Well, the news last week was that being aggressive about getting people back and getting a booster. The news yesterday was, wait a second, let's hold off on this for a little bit of time and wait for the Omicron variant to burn out. Can we say that?
Yeah, I think, think about the doctors we've talked to who said, listen, folks, we're all going to get it. And that could be a good thing ultimately. What's interesting, Tim, and I was thinking about what Vince said, markets are realizing that, we're going to get through COVID, okay? We understand that. And I do think the next couple of weeks, especially if we see numbers peak and things go back, look at how quickly companies shut down, pull back, even our own company, in terms of people, working from home.
You and I are here.
We are. I was double mask walking in this morning.
Smart move.
I am walking around with Lysol everywhere. But what's interesting is companies understand what can be done very quickly to help slow the progress of the virus and maybe get things back to normal more quickly.
Let's talk briefly about Starbucks, because now it's requiring vaccine or weekly testing for U.S. workers. They're going to start doing this by February 9th. Carol, I think we're going to start to hear more about this and the booster in the coming weeks.
All right. We're going to talk a little bit more about COVID in just a moment right here on Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Back to work Monday. The Dow, the S&P, NASDAQ all advancing right now. Do want to begin with Apple. Shares rallying with the stock briefly hitting a historic $3 trillion market valuation for the first time. Apple shares right now are up 2.6% to 182.24. NASDAQ up 155, up by 1%. Tech-heavy NASDAQ 100 index also up by 1%. The S&P is up 21, up by 0.5%. The Dow up 166, up by 0.5%. Equity volumes, though, do remain light. Some markets are on holiday today. 10-year yield 1.62%. Spot gold tumbling $27 the ounce, down 1.5% to 18.01. West Texas Intermediate crude up 1%, 75.96 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic. We mentioned some of the COVID headlines. We know U.S. regulators have given emergency approval for people ages 12 to 15 to receive a third dose of Pfizer's vaccine. I do feel like all of this stuff is going to be very helpful.
Do they get it, though?
I don't know.
That's the question.
Yeah, there is always that issue, right? We do know a record 10 million people were diagnosed in the 7 days through Sunday, almost twice the previous weekly high as Omicron spread across the globe. So we are dealing with those numbers. That's the tough part of it.
Another question. Do we still care about numbers? If everyone's going to get this, do we care about case count or do we care more about hospitalizations and deaths?
It's a great question. Let's put that to our next guest. Dr. William Haseltine is back with us, Chairman and President of Access Health International. You know who they are. They're a nonprofit. They're on a mission to really improve access to high quality and affordable health care for people everywhere. Dr. Haseltine, so well known in the biotech world. He's founded several biotech companies, including Human Genome Sciences, and he joins us once again on the phone from Connecticut. Dr. Haseltine, so good to have you here with Tim and myself. How are you?
I'm very well, and I wish you both a happy new year.
Well, same to you. Happy and healthy one to all of yours. What's the number we need to focus on when it comes to COVID cases versus hospitalizations versus deaths and so on?
It would be a real disaster to give up counting cases of infection. The reason for that is that's how you allocate resources. You have to know where that infection is. Secondly, it is also going to be an indicator of what's going to happen in the future, what's going to happen with long COVID. Everybody talks about hospitalizations, but in any battle, you count the wounded, the hospital, and the dead. It's important to count the dead, of course. It's important to count hospitalizations. But those who are wounded may be seriously wounded for a long time. At least half of those who have mild cases may have 2 or 3 months of serious issues, and about 10% may have long-term, very serious mental issues, issues with their kidneys, needing transplants, diabetes, heart disease, a lot of really big problems. So it's really important. It would be a big disaster. We count flu cases as well as flu hospitalizations and deaths. So I think we have to keep counting cases. It tells us what's happening where. It's also a very good guide for you personally to figure out what your risk is of getting infected. It's sort of like the weather. It's a weather report. Is it sunny? Is it raining? Is it a thunderstorm or a tornado? You have to know what the infection rate is in your area. It's a very, very big mistake to think we should give up case counting.
Okay, that's good to know. Hey, Dr. Haseltine, help us understand how you're thinking about the Omicron variant. We're getting more and more data each and every day, and the data continue to tell us that perhaps this isn't doesn't make people as sick as previous variants, including the Delta variant. What do we need to know about the Omicron variant?
I think that, again, is false reassurance. First of all, we know it's highly, highly transmissible, and that you and I know that we have people who've never been infected before who are very carefully and triply vaccinated, and even triply vaccinated and previously infected who are getting infected. And some of them are getting pretty sick. I have friends that have been sick for 10 days already with this. So it may be, on the statistical basis, putting fewer people in the hospital. And it looks like that's likely to be true, especially if you're vaccinated. I think we have very little data on what happens to that large fraction of people who aren't vaccinated. Second thing, before we're willing to write this off as mild and therefore not worry about it, what's happening to our kids? It's putting a lot of our kids and young people in the hospital, 3-4 times more than any other pandemic we've had of this, any other waves we had in the past. So I think those are really big questions. And finally, we don't know what this is going to do for long COVID. I saw one summary of this was a Trojan horse, and inside were little Omicrons saying long COVID. So we really have to take a good look at what the pathogenesis is going to be. I think the responsible attitude is to say it's serious, let's take it carefully and do whatever we can to avoid it.
Yeah, it's something Tim and I know talk about. I know we talk about it at home. I have a daughter who's 18, and she's like, my fear, knock on Formica, that she hasn't gotten it, and she thinks about, I'm a young person. What happens if I'm one of the long haulers? I do wonder too, Dr. Hazeltine, you know, we have had members of the medical community on saying, we're all going to get it. And in some ways that may help it burn itself out. But is that true? Like, I do wonder, are we still possibly at risk of a variant that is very contagious and very virulent at the same time?
We are. And I think that those people who've always said, there's always been a tendency for people to say that this is the last one, we're going to get herd immunity. I think it was clear from the very beginning that there is no such thing as herd immunity for coronaviruses. Coronaviruses come back as colds every year, despite the fact you've had it the year before, and they give you another cold. And this thing is going to keep coming back. It has been evolved to bypass our immune defenses. Now, we're fortunate that the vaccines seem to reduce hospitalization by about tenfold, which is fantastic. But how long that will hold, we don't know. We just have no idea yet, whether it's a year, 2 years, or 3 years. We're pretty sure it's not going to be forever. But this virus is never going to be such a thing, in my opinion, as herd immunity, whether it's induced by vaccine or by infection. We have to take this really seriously, gear up our massive research efforts, which we have. We have the capability to do it, find many ways to stop this, whether it's with drugs or better vaccines or continual vaccines. We have to take this really seriously. And it's not going to go away. It's not going to go away for herd immunity, for sure.
Hey, Dr. Hazeltine, last question. When is this going to be in the rearview mirror for us?
Unpredicted. I'm not willing to make that prediction. I don't see it appearing in the rearview mirror. You asked the question, can this combine both transmission and lethality? The answer is yes. It's what we're worried about. My immediate worry is it's going to recombine with Delta. A friend of mine calls it Omicron. So we might create a new hybrid. There are a lot of people with both infections in this country right now, and we know this virus is a master at recombining. So I think I don't see the rearview mirror appearing yet.
It's interesting you say that whole idea of what you said earlier, too, about the false sense of security. I heard people saying, well, it's only going to be Omicron. It's not so lethal. And then we were having a conversation at home, but it was like, well, what if I get it and I actually get it from the Delta variant, and it's a lot more serious. Dr. Hazeltine, always good to get some time with you. Please stay safe and healthy. Chairman and President of Access Health International joining us once again on the phone from Connecticut. He's also author of CVPTSD, COVID-related post-traumatic stress disorder, what it is and what to do about it.
Well, we do have some breaking news that we want to get to. We're learning about Elizabeth Holmes. The Holmes jury is struggling to reach a verdict on 3 of 11 counts. Right now, joining us is Bloomberg News legal reporter Malathi Nayak. Malathi, thanks for joining us on this. Bring us up to speed on what we need to know. This is for 3 of 11 counts. So what does that mean for the trial?
Yeah, so in the new year, the jury got back to court in the 7th full day of deliberations, and they sent a little note to the judge saying that they are grappling with reaching a consensus or a unanimous verdict on 3 of the 11 counts that Elizabeth Holmes faces. So these are 11 counts of wire fraud, and the lawyers were called in, the prosecutors came in as well, and they huddled and tried to figure out what to do next. They agreed that they would, reread some instructions that were previously given to the jury with some minor tweaks. The judge called the jury in, and these instructions were read out to the court. the judge encouraged the jurors to go back and try to reach a consensus on the 3 counts that they're currently struggling with. And he told them, to take their time, not to hurry. He told the jurors that each one must stick to their own honest views and not be pressured by views of others just in the hopes of reaching a verdict as quickly as possible.
So what happens if they don't reach some kind of verdict on those 3 counts?
So, it could be that the judge will move forward and call for a mistrial on the 3 counts where the jury is currently struggling. It's also possible that they go back and, do figure out some way to reach a consensus on the 3 counts. So we'll have to see how things pan out, and how the judge decides to, move forward with the counts if the jury is not able to reach a unanimous verdict on those specific counts. So there are 11 counts in total, and today there was no clarity, or they didn't reveal which of the counts the jury was struggling with. So we'll have to see, which ones they may have a partial verdict on. So the judge could decide that the jury delivers a partial verdict, and then with the remaining 3 verdicts, he will have to remaining 3 counts. He'll have to decide whether the jury will potentially have to continue deliberating like he did today, or he will potentially call for a mistrial where there may be, where they might have to have a new trial on those specific counts.
But just to clarify, for the 8 other counts that they have reached a verdict on, that would be sort of set in stone, and she would have to abide by whatever the jury decided on those. A new trial could perhaps come for those 3 other counts that the jury has not reached a verdict on.
That's correct. Sometimes, in some cases, some judges do allow for partial verdicts on few counts, and then, the other 3 counts, if there's a mistrial, there would be proceedings that would continue on that front.
So what's the thing you're kind of watching out for in terms of maybe, is it just this goes for another day or 2? I mean, what's the next thing you're watching out for?
Yeah, so in terms of what comes next, we're just keeping an eye for any other notes that the jury may send to the judge, just to provide any signals on whether, they're moving forward, and whether they're actually having more questions, or whether they're still having trouble, coming together to have a unanimous verdict. So we'll keep an eye out for any sort of messages that the jury will send to the judge. We'll keep an eye out for whether there may be a verdict by the end of the day. You never know. It's very hard to say with juries how things could go. So we'll just be keeping an eye on what comes next, just in terms of messages that the jury sends the judge.
Yeah, 3-month trial, dozens of witnesses, and they have reached a verdict on 8 counts. It's just they're struggling on the other 3.
I'm dying to know what those ones are.
Yeah, and it's been
Go ahead. No, what?
And it's been a long 3 months, so there's a lot of evidence that they have to go through, and it's they're on their 7th day of deliberations. They've just come back after a break, and now it's a new year, and hopefully we should have a verdict soon. But when they'll be ready, your guess is as good as mine.
Maybe some hard partying New Year's, and they're just a little exhausted. Malathi, thank you so much. Malathi Nayak, she's Bloomberg News legal reporter. Again, as we mentioned, the jury that is dealing with and deliberating over the fate of Elizabeth Holmes, struggling to reach a verdict on 3 of the 11 accounts. So that will continue on, Tim.
Well, let's get a check of the trading day on this first trading day of the year. Here's Charlie Pellet.
Hey, thank you very much, Tim. Happy New Year to you all. We've got the Dow, the S&P, NASDAQ all advancing. Treasuries extending losses as traders brace for the start of a potentially volatile year, along with 3 expected rate increases from the Federal Reserve. Right now, the 10-year yield 1.62% on this Back to Work Monday. The S&P up 22, up 0.5%. The Dow up 170, also up 0.5%. The NASDAQ Composite Index, the outperformer, up 153 to start the new year, up by 1%. The NASDAQ 100 Index up by 0.9%. Apple hitting and then pulling back from a $3 trillion market cap. Apple shares up now by 2.4%, $181.91 on Apple. Gold down 1.5%, $18.02 the ounce. West Texas Intermediate crude up 1.1%, $76.02 a barrel. A record 10 million people have been diagnosed with COVID-19 in the 7 days through Sunday, almost twice the pandemic's previous weekly high. As Omicron spreads across the globe, weekly deaths, though, continue to drop. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
The question is, can we keep hospitalizations down enough during this period so we're not swamping hospitals? Because even though there's a less risk of getting hospitalized with Omicron, it's still a risk. And with so many people infected, you see numbers increasing in the hospital. I heard from some doctors saying it's a lot of patients, but the good news is they're not as sick overall as they were back in the Delta wave.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we follow on a regular basis. Pfizer down 3.6%. BioNTech shares, they're plunging right now by 8.5%. AstraZeneca's ADRs down by 0.3%. Moderna out of Cambridge down 7.8%. J&J Johnson & Johnson down 0.1%. Recapping, S&P up 0.4, 10-year yield 1.62%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this story has definitely been on our radar over the last couple of months or so, popping
Radar,
on it.
I like what you did there.
But
Wow.
a little time off and see what can happen. It's also on the radar of airlines who are warning of increased flight delays, not because of COVID, but because, Tim, of possible 5G disruption.
Todd Shields is regulatory reporter for Bloomberg News. Todd joins us on the phone from Annapolis. Todd, help us understand what exactly the airlines are concerned about when it comes to 5G.
Hi. Well, this is it's quite a debate we've got going here. We're coming to final days of it. It's been going on for months. The mobile providers, AT&T and Verizon, are going to start 5G service. It's the next big thing, right? And they're going to
so they say.
So they say. We're all waiting. They're going to put it on new airwaves, and those airwaves recently carried faint satellite signals. Now those airwaves will carry the 5G that we'll need to do things like, I don't know, autonomous cars or have your refrigerator talk to you, et cetera. Well, they're stronger than satellite signals, and they're near signals used by some aircraft equipment, the altimeters that tell pilots how high above the ground they are. And the airlines and aircraft people worry that the 5G signals, when they're beamed out of towers near airports, will confuse the altimeters. Pilots won't know how far above the ground they are. Very hazardous situation. So that leads to delays when pilots avoid runways bathed in 5G signals, especially, here we go, January 5, the service starts. We're moving into foul weather time, storms around, wintry stuff. Especially in bad weather, you really, really need your altimeters to be very precise.
All right, so
we got a mess.
So earlier this morning on Surveillance, I was listening, and Matt Miller was talking about his mom, who I've met and I adore. And she said one of the big problems, she said to Matt, is I'm worried about if I'm going to be able to get to New York to see you, Matt, because I'm worried about this 5G stuff. Todd, do we need to be concerned about this?
If the airlines are telling us that, especially when weather kicks up, we're going to have a lot of delays. And yes, the New York and Newark airports are on the list of airports of concern if 5G lights up. Now, I've got to add the subtext here. The wireless companies say these warnings are way overblown, way late to the game. There's plenty of space between the frequencies, nothing to see here, say the wireless companies.
I'm confused. I thought 5G, I've got 5G on my phone. I thought it was already out there. So help me, because I'm just stupid on this stuff.
This stuff's complicated. It's out there, but on different frequencies. It's like in the old days, if you had a radio in your car, you'd spin the dial and the little thing would move from left to right as you go up and down the radio channels. And that indicated distance between the frequencies out there in the airwaves. So it's a different. 5G has been around, but on different airwaves, and this new set of airwaves is the issue, not the 5G per se. It's just powerful signals moving into a set of airwaves that were very quiet before.
So technically, is there a way that airlines and wireless providers like Verizon and AT&T can get along in the end?
Can't we just all get along?
One would think so, but for that we need more time. Both sides let this slip till very late. Let me retract that. I don't want to do a both sides-ism, but the situation has slipped to very late. Service to start in 2 days, and we're at loggerheads. You would think that things could be done like filters to keep the altimeters from picking up spurious signals. New altimeters, beams from the 5G that point down, not up, so a little bit of power reduction around airports. That was offered by the wireless providers. So there might be some combination of things that would fix it. We'll just have to see.
Yeah, see, that's actually what I was thinking about. The last thing that you said, Todd. Why don't they just roll out this 5G and the new frequency outside of airports for now? Because what we do know about 5G is it doesn't have the range that the previous generations of wireless had, right?
Correct. Yeah, it works best close range, these airways.
So can't they just avoid it around airports, around runways? Would that solve it?
Well, that's sort of the offer, but it's interesting. The wireless companies, in a kind of a scorching letter back to Secretary Buttigieg, the transportation secretary, said, "Look, you're expropriating our airways, and between the lines, we're really mad." They said between the lines, and they said we'll do a deal on the airports to stay away from around the airports if you guys don't escalate on your side. And I think escalating on their side amounts to perhaps going to court. So we'll have to see if that happens in the next couple of days. And I would guess if the airlines and the transportation department go to court to stop this airwave switch enabled by the FCC, we may not see the standoff, the delay around airports. It's a mess.
Todd, is it a global problem though? Or
no,
just
right
the
now.
U.S. Okay.
But we get opposing. One side says it's working great all around the world, but the pilots and the airlines say that's because all around the world they have lower power and better protections around airports.
What I really want to know is, do I really have to put my phone in airplane mode when I'm on the phone, on a plane? Do I?
That's a different story.
Okay.
Does she, Todd?
Do I need to, though?
Geez. I don't think there have been any reports of problems from that. But when I'm on an airplane, I do it because I like to play ball with the pilots.
What about when you're at the gas station? There are the signs at the gas station that you're not supposed to do that.
Those I don't worry about.
Okay.
All right, I'm just going to say, sometimes I forgot while I've been flying, and I'm like, oh my God, I'm going to crash the plane. Todd, I'm sure we'll be talking to you more about this in 2022. Todd Shields, he's our regulatory reporter at Bloomberg News, on the phone from Annapolis, Maryland. I've done that by mistake, and I'm thinking, oh my God.
That was really interesting, by the way.
Yeah. Well, and I'm curious, why weren't regulators way ahead of the game saying, okay, this is going to be a problem. Let's set some rules before.
Also, in case you're seeing track, Delta Airlines sees about 200 cancellations a day on Tuesday and Wednesday of this week. That's not because of 5G.
That's because of COVID. That's the other problem.
Weather too, maybe?
Yeah.
Maybe.
Oh, yeah, all the snow?
Maybe.
In D.C. All right, let's get back to world and national news. Over to Nancy Lyons. She's in our newsroom in that snowy D.C. Hey, Nance.
That's right. It is snowing here. Thanks, Carol. The Food and Drug Administration has approved Pfizer booster shots for children as young as 12. Kelly Frank is a middle school teacher in Waldorf, Maryland, and she says this is excellent news.
If my students can stay healthy, maybe there's more of a chance that I can stay healthy, and that can spread throughout the whole school.
The CDC has the final say and must decide whether to recommend boosters for the younger teens. Boosters already are recommended for everyone 16 and older. Thursday marks 1 year since the attack on the Capitol. Pro-Trump protesters stormed the Capitol building, leaving more than 150 law enforcement officers injured. Then President Trump was accused of inciting an insurrection and was impeached a second time. Democratic Congressman Jamie Raskin was the lead impeachment manager and writes about the experience in a new book. He spoke with CBS about what he calls an attempted coup.
We don't have a lot of experience with coups in American history, and we think of a coup as something against a president, but this was a coup waged by a president against a vice president and against the Congress in order to overthrow the 2020 presidential election and to seize the presidency for a second term.
Raskin's book is titled Unthinkable: Trauma, Truth, and the Trials of American Democracy. Senate Majority Leader Chuck Schumer is promising his chamber will consider rule changes amid the fierce debate over voting rights. In a letter to his colleagues, he says changes to the Senate rules will be debated and considered on or prior to January 17th if Republicans do not cooperate. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in a snowy Washington, D.C. on this first trading day of the new year. First trading day of the new year. It's kind of a mellow market, although stocks are near their best levels of the day. So even though the concerns about COVID, markets seem to be shrugging off, a lot.
Yeah, I wonder how those parents at home are feeling. Potentially ones in New Jersey who are still remote, and ones in New York City whose kids are back at school.
Is your son in daycare today?
It's nursery school, Carol.
Oh, sorry, I'm sorry.
It's a nursery school, okay? He would get very offended if you called it daycare.
He's absolutely right to be.
He's not, and here's why.
I was curious.
This is actually really interesting. They decided he was scheduled to be in it, but they decided to do a COVID test today. So based on the amount of time that had passed between the holidays and the break, they wanted all students to submit a COVID test today.
Okay.
And then they'll get the results tonight. Those ones who test positive for COVID won't be coming to school. Those ones who don't test positive can come to school. And the issue is that because all these kids are unvaccinated, if somebody in the class tests positive, the school shuts down for 10 days. The class shuts down for 10 days.
So better to screen ahead of time and make
Exactly.
sure who comes into the nursery school.
Nursery school, yeah, not daycare.
Sorry, Marlo. All right, so having said that, New York City Mayor Eric Adams trying to reassure parents of the 1 million public school students here in the Big Apple that it was safe to return to classes today after the winter break, despite a surge in COVID cases. He did speak. He's been actually out and about, Mayor Adams. He did also speak with our David Weston here on Bloomberg Radio and Bloomberg TV.
Yeah, he said, quote, our city and school system must open. He said, quote, we cannot lose more years of education for our children.
Yeah, exactly. The hard thing is the positivity rate, 7-day COVID positivity rate, surpassing 32% on December 30th. Wow. Yeah, reaching nearly 45% in some areas of the Bronx, according to city data. The 7-day average hospitalizations have more than tripled since mid-December to 447 on December 30th. I've got some doctor's things coming up, and I'm like, are you guys going to be open? Like,
I had a doctor's appointment canceled last week.
You did?
Yeah, they didn't tell me why, but they said that the doctor was sick. I don't know why.
All right, we're tracking all of this and continuing to cover it. This, as also Wall Street firms we know have increasingly said work from home. You're listening to Bloomberg Radio.
and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. First trading day of the new year. A move higher right now. Best level on the Dow, the S&P, and NASDAQ. Stocks kicking off the first trading session of the new year on a high note after notching their third consecutive year of double-digit gains in 2021. S&P now up by 29 points. That is a gain of 0.6%. The Dow up 211, a gain there of 0.6% as well. NASDAQ, the outperformer, up 177, up 1.1%. NASDAQ 100 index also up 1.1%. Russell 2000 up by 0.8%. 10-year yield 1.62% on the 10-year now. Spot gold down 1.5%, 18.02 the ounce. West Texas Intermediate crude up 1.1%, 76.07 a barrel. So again, recapping, stocks rally with the S&P up 28, up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it. Thank you so much, Charlie. Well, workers, we know, continuing to work remotely, increasingly so with the rise in COVID cases. Meantime, their kids are spending more time in the office. For more on what's going on, Tim, it's a story you'll find online at Bloomberg Business Week.
Let's bring in Jeff Green, who wrote the story. He's managing diversity reporter for Bloomberg News. He joins us on the phone from Michigan. Also joining us is Joel Weber, editor at Bloomberg Business Week. He is joining us on the remote access line from Brooklyn. Happy New Year to both of you guys. First, Joel, I want to start with just for people who don't have kids, maybe they don't understand or know what Bright Horizons is. So let's start with Bright Horizons because that's a central part to the story.
Oh, man. So Bright Horizons has a network of facilities across the country that allow you to basically have a daycare option. And a lot of people and a lot of employers use that as sort of an emergency safety net. So
present company included, right?
Yeah, exactly. It's all part of your EAP program. And disclaimer, Bloomberg is included in that. They also have an in-home option that pre-COVID, like I personally would take advantage of when things went awry. And, you know, as we were working on a series of stories that we were calling the new rules of work, Jeff's reporting on the company sort of fascinated us because here's a company that actually has a business model that could only become more helpful for employers as we deal with these ongoing school dilemmas, ongoing childcare issues, and Omicron in some ways embodies that. So Jeff, tell us about what you discovered and what the future holds for the company.
Yeah, what really led me into this is the fact that like the core of their business is offering on-site daycare for people who go to the office. So my initial assumption was, well, this can't be good because nobody's going to the office. But sort of just after 10, 20 minutes talking to the CEO and then also looking at what was happening, became clear that there's this daycare crisis that we already knew about. Here's a company that offers not just on-site daycare, but subsidized, like 25 to 50% reduction for the employees for the 120,000 kids whose parents are lucky enough to have this option. And so what could have been a disaster, they had to close like 850 of 1,000 centers right off the bat when the pandemic came. Now they're almost all back opened, and people are using it as a retention tool or a recruiting tool for new employees, saying, hey, come here, we'll pay for your daycare, and you can have them right here at the office. Even if you're not coming to your office, your kids can be here. So it was completely not what I expected to hear. I thought I was going to hear this story of shifting completely to another line of business, but it turned out their core was actually positioned well too.
Jeff, I feel like for so many years it's been taboo to even talk about, childcare at the office. It's really, and I don't know whether it's cost of COVID specifically, but things have changed dramatically.
Yeah, a lot of people didn't really care if their employees had children or not, except, maybe in the HR department. But you start to see them on Zoom and you realize, when your own EVPs of whatever are on Twitter talking about how rough it is to parent during the pandemic, suddenly people are like, wow, like a lot of people have children and some of those people are struggling.
CEOs have children.
Yes, exactly. Yeah, and I mean, that is sort of, it's almost a bittersweet tale because so many of us, I mean, I shouldn't say us because we technically qualified for at least the temporary version, but very few people can actually get the full-on subsidized on-site daycare that this offers. So for those people who are lucky enough to work for those companies, this is a solution to a problem that for most people still doesn't really seem to have any kind of, the Building Back Better is kind of stalled, which had some money toward it. It's just we don't really see an answer for most people for this problem.
Yeah, Jeff, talk a little bit more about this, because you do make that point in the story that this is something that is really for the luckiest of employees in the United States, a benefit that's really only available to, in the greater scheme of things, a handful of people. What is the conversation that's happening nationwide, and how has that changed in the Biden administration? And with the stalling of Build Back Better, does that become something in 2022 that's kind of on the back burner?
Yeah, I mean, unless the government or somebody is going to come forward and say, hey, everyone who has children, here's subsidized daycare for you. I mean, in some places, your daycare costs more than your rent. So if you want to be a member of the workforce, and, I mean, you can't just keep your kids at home like we did during the pandemic. That's not a long-term tenable solution for anyone who's tried to, have a meeting and have a toddler or even a teenager who has, things they need to do. It works in an emergency, but it's not like the solution for forever.
So speaking of forever solutions, Jeff, like the other thing that a CEO of a childcare company like this would face is just this ongoing labor shortage. And what did you learn on that front? Because already, childcare is not, childcare professionals are not getting paid, what would even be deemed a living wage for the most part, right?
Yeah, that's one of the other advantages they have, being this sort of, on-site high-end partner, is they can pay more. They also offer the ability to get a higher education degree in child care, or in child's whatever. I mean, you can basically get a college degree by working here and take yourself even farther into this field to a higher level of pay. So it's that, but it's still, I mean, one of the reasons they don't expect a full return to their margins until maybe later this year or next year, whatever the latest estimate is the headwind of having to pay more. I mean, they're not immune to it. It's just they start from a better position, and they're able to maybe attract people with some of the benefits that others just can't offer for the same reasons we've been talking about. It's really hard to, $11, $12 an hour is kind of the tops for a lot of these daycare providers.
Okay, so the other thing that you can do when you're in this business is to not just do childcare, and growth for the company looks like what?
Yeah, so I mean, you mentioned the emergency care, really high margins there. They added 150 at least new customers in that area. I think it was 150, more than 100. And everyone they add is bringing in higher margin business, because that's basically, any company, including ours, pays up front for a certain number of days, and then also will add days as more are needed. And then you have some of these they bought Sitter City, they bought a camp provider, which will be, loom a lot larger as we come into the third summer of a pandemic, and people are trying to figure out, where our kids going to go. And, now many of them are back at school, but there's all these, they basically kind of hedge their bet. You can, in theory, use their services from everywhere from your toddler to your high school senior trying to find out how to get into college. So they've been widening the aperture of how they approach children. And in fact, some of their customers have been demanding it. They wanted, they used some of their facilities that were closed as middle school care kind of centers during the pandemic.
Well, I also love how they're kind of helping out what they call that sandwich generation, right? Those individuals, because they're looking into also, I guess, providing elder care. So it's interesting that they are looking to kind of help us on all different levels so that we can actually work, whether it's from home or elsewhere. It is another great story from you, Jeff. Thank you so much. Jeff Green, he's managing diversity reporter at Bloomberg News, on the phone from Michigan. You can check it out. It is online at businessweek.com. Jill Weber, he's editor of Businessweek magazine. And of course, you can find all those stories online on the terminal, and of course check out the news stands, because you can pick up the magazine as well. What?
It's easy to work from home with a 3-year-old. No way. Not a chance.
It's not.
Impossible.
All right, you're listening to Bloomberg Business. We're going to catch up with our TV team and take a look at the markets for you right here on Bloomberg.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close with 60 minutes left in the trading session. Caroline Hyde, Romain Bostick and Taylor Riggs, joined now by our colleagues Carol Massas, Tim Stanovic. We together welcome fully across our Bloomberg audiences, TV, radio, YouTube, at last, the five of us back together. And, well, there's some volatility to be had in the treasuries market for sure.
Well, and that's the really, I think, big story today. I think safe to say here we've got, what, a 10-year above 162, 163 here. So we've moved up pretty dramatically in terms of treasuries. And yet, folks, we've got a rally underway in the equity markets, in particular, some of those big tech names, Tim.
Well, that's kind of where I'm a little bit confused. Typically, when we see a spike such as this, wouldn't we tend to see some sort of underperformance from the big tech companies, from the NASDAQ? Or is the narrative kind of what we were talking about over the last few weeks, that a lot of these large companies are turning into defensive plays?
Yeah, well, maybe that's why Apple hit a $3 trillion market capitalization a little bit earlier. This is why you got the NASDAQ in charge. Let's look at the majors, because it really is a day of strength. As you say, Tim, for tech, we're looking at the NASDAQ up 164 points, up more than a percentage point today. S&P 500 and Dow both up more than 0.5–10%. And the Russell 2000, it seems that big tech and small caps, Taylor, are where the winning streak is. It's up 0.9%.
Yeah, and it really always comes back to some of the bond proxies as well. And I know that we do that as we take a look at the sector level. Caroline, you talk about some of this risk on feeling the energy sector. That's the big outperformer on the day. I would note it's also the best performer last year as well, after crude just had one of the best runs in a decade. So you really see energy as one of the big outperformers. Yes, technology is in there as well, but everything else on the bottom of the screen, Romain, is a bond story with materials, healthcare, real estate, utilities. Those typically fall when yields rise, and you see that today.
Yeah, some of those REITs are really taken on the chin today. Of course, we're still keeping an eye on Apple. Apple shares still camped out right around about $181 a share here or so here, right around 182 here. So still shy of that $3 trillion market cap, which it did tick above, up 2.5% on the day. That's a record high, folks. AMD shares up about 5% here on the day. We should point out that Goldman Sachs actually naming this as top semiconductor pick for 2022 here, on the expectation that there'll be some positive estimate revisions there. Moderna shares down about 8%, as is Pfizer and some of the other stocks in that healthcare space. That doesn't appear to be particularly tied to COVID, but more to valuations and some of the pullback that we're seeing in the market. Keep in mind, Moderna was the third best performer in the S&P last year, as it was in 2020 as well. And Tyson Foods shares, we had been lower here on the day on word that the Biden administration was actually pushing for a little bit more scrutiny of some of the practices of meat packers out there. Those shares now higher by about 0.3%.
And Romain, you always dig out the most important stock stories. But as we said, basically the story of today has got to be where Taylor's love is. It's all about treasuries. It's about yields. It's about the spike higher. It is about the market really getting its head around whether we have 3 rate hikes as soon as this year and what the timing of that is.
Yeah,
You take it, Romain.
Yeah, I'll take it. I don't know where Carol is. I mean, Carol.
Oh, I'm sorry. Did you want me to jump in?
Carol's been away for weeks. She doesn't know what's going on. I get it. You know, you get rusty. You don't quite know the flow here, Carol. By the way, Happy New Year. I haven't seen you, Carol.
Happy New Year, everyone. And here we are talking about some of the same old stuff, right? We're talking about COVID cases. I think what's interesting is whether or not, and it almost feels like the markets are moving through COVID. Like, we understand what can happen, and we're hoping in a couple of weeks these numbers start to come down. What's interesting is this first day of trading, you know, you can't read too much into what we're seeing in the cycle. Keep in mind, we have a lot of economic news this week, and that could start to develop, right, new trend lines. Here's what Torsten Slok had to say. He's a chief economist over at Apollo. He had something to say about the economy, as well as that jobs report we get on Friday.
The message is a little bit mixed on where the economy is at the moment. And I think the employment report, I think the consensus, which has roughly around 400,000, is about right. The employment report should be relatively decent, nothing spectacular, but at the same time not showing any signs of any dramatic slowdown.
All right, so the trend line we get, of course, Torsten Slok there from Apollo. What's interesting is what happens with the labor market? What happens with inflation? What are those CEOs going to say when it comes to earnings? What are the new trend lines for 2022? There's still a lot of questions out there, Tim.
Yeah, there certainly are. We're going to get a little more insight into that when we do hear the latest labor report that comes on Friday. 400,000 expected, down from the previous month of more than 500K. But is it a big miss? You know, like we've had a couple months of big misses, and yes, they've had, you know, revisions to previous months.
Yeah.
But economists haven't been really on with their predictions.
Yeah, and I mean, look, a lot's going to be made of that big monthly report here that we get on Friday. But I really think you have to go to the next week after that here when we start to see some of those retail sales numbers, the latest inflation data. I think that's going to be much more of a driver here of market sentiment. We kind of know the trend line in the labor market. So unless there's some huge surprise to the up or downside, I don't think that in and of itself is going to change sentiment.
But where the resiliency has been today, Romain, is the manufacturing part of the system. We've all been worried about supply chains clogging up once again. I might say trying to find an N95 mask for my child right now is inflationary to say the least. But there are some issues that we worried about the Omicron variant. What would that mean for manufacturing? The data shows we shouldn't get too concerned.
How much, I've got a big stockpile of those.
Oh, well,
maybe that's why they're expensive. Everyone's been hoarding them, Romain.
2 years ago, he was hoarding my toilet paper. So, Romain, you are just so on brand right now.
Side business, I think.
Look, next pandemic, we all go to Romain's apartment, okay?
You know, Carol, I wanted to bring this up. When we talk about some of those inflationary pressures, our big take story this morning was highlighting at least, 500 research notes from everyone on the street or from most on the street. And inflation was mentioned, 224 times?
The most
variant was
cited,
only
right?
mentioned a couple dozen times. Effectively, the big risk really has been inflation. That is what is on top of people's minds as they look out to the economy and the markets.
China and concerns about China growth was cited more than concerns about COVID, which is, I thought, an interesting thing. But you're right, inflation. I have to say, in and around trying to buy things, there's plenty of stuff out there. I haven't seen any of those disruptions that everybody talks about, and we'll see what it means in the new year.
Well, I mean, for our television audience, I mean, we're holding up right now sort of the average estimates out there for where the S&P is going to end on the year. Right now, that high is at 53.30, the average at 49.50. But there aren't too many estimates right now that are below where we are right now. There are a couple down around the 4,400 mark. But even in the face of inflation, even in the face of all the challenges out there, Carol and Tim, the general idea here is that this market will creep higher. It's not going to be the 27% gain that Tim was just crowing about all week long last week.
Third S&P 500 double-digit gain in a row.
Yeah.
He's been reading his 401k through the whole show.
All last week for us, Carol.
But who was talking about treasuries last week? While Taylor was off having some fun in the snow, I want to know who was talking about these phenomenal moves that we see on the daily.
You know who was hearing about treasuries? Whoever Taylor was sitting next to on the chairlift. That's who was hearing about treasuries, okay?
Well played, Tim.
Well done, well done. All right, anyway, interesting things that we're going to keep an eye on, certainly in 2022. All right, that's a wrap, guys. We're going to be back at 4 p.m. Wall Street time. We'll count you down to the close.
Don't forget, Carol.
Well, I got to take notes again. I forget how to do this. All right, guys, we'll be back with you for Beyond the Bell at 4 p.m. Wall Street time on TV, on radio, on YouTube.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I did forget how to do all this stuff. I'm really calm, though. I'm very, at peace right now.
So you know what you need to do? You need the schedule
coffee?
like a pilot has.
What's that?
You know, I don't know exactly what the schedule is, but I think it's 3 days of work, 5 days off, or something like that. I mean, it's pretty good.
I did feel a little
right? Is that right, guys? I don't know. I'm looking at the
probably do it
control
right.
room they know.
Well, but don't you feel that way when you've gotten a little bit of a break? You feel like you have new energy, new
totally
excitement.
Energized.
I was like, how do
Sleeping
I do
a lot.
this? How do I remember my badge? I do find it
You're
remarkable.
Here, and that's what matters.
I am here. I do find it remarkable, though, that, you look at the move up in yields. I love what Vince Signorella had to say earlier, that we are looking through COVID, that we understand the Fed's going to start raising rates. We're still going to see historically rates at a pretty low level.
You make that point, Carol. You've made that point for, 4 months at this time?
Shut up, Masser. Is that what
no,
you're saying?
You're absolutely right. It's something we heard repeatedly last week. People were throwing up their hands saying, hey, wait a second. We're not talking high interest rates here, people. And I'm just thinking to myself, have you been listening to Carol Masser? Because it's true.
Been around the block a few times.
And I think, was it also Vince Signorella who kind of referenced that earlier in our show today?
Yeah.
We're not talking interest rates of the early 1980s here.
No, it's not going to necessarily put a stop on people buying homes because mortgage rates will still be low. I mean, I just think we need to keep this in perspective. Might we not see the gains that we saw in equity markets that we saw last year? But I'll take 10%.
27% isn't normal?
I'll take 10%.
Yeah.
I'll take 8% or 9%,
yes.
which are more historical, right?
As long as inflation's not out of control, right?
Exactly. But the thing is, because of inflation, will that keep you away from a lot of the fixed income investments where you don't get those returns because of inflation?
Do we see inflation peak this year?
I don't know. Let me pull up my crystal ball. All right, crystal ball. What are we seeing?
Pull up that crystal ball.
All I know is I can buy stuff. Does it continue to be? Why is it so expensive still? That's what I don't understand. Is it just that there's more demand than supply?
Yeah, certainly a theme we'll hear from executives as we start to report earnings in just a few weeks. Let's get to the latest world and national news. Nancy Lyons is in D.C. Hey there, Nance.
Hey, Tim. The jury in the Elizabeth Holmes trial is grappling with the case and told the judge today they cannot reach consensus on 3 of the 11 fraud charges she faces in connection with her company, Theranos. Bloomberg News legal reporter Malathi Nayak has been covering the 3-month trial and has more on the judge's response.
He told the jurors that each one must stick to their own honest views and not be pressured by views of others just in the hopes of reaching a verdict as quickly as possible.
Malathi Nayak says the judge could allow a mistrial on just those 3 charges. Ivanka Trump and Donald Trump Jr. have been subpoenaed by the New York Attorney General as part of the state's probe into whether former President Donald Trump's real estate business manipulated the value of key assets for tax and insurance purposes. All 3 Trumps are fighting subpoenas. The new mayor of New York City, Eric Adams, is determined to keep the nation's largest school system open despite staff shortages as teachers contract COVID.
1.5 million home test kits have been distributed to the schools across the city, Mayor Adams said in a Bloomberg interview.
A child is diagnosed with COVID in a classroom. We give that entire classroom take-home test kits so their parents can test them so we can determine what we should do. What has happened in the past, you have one diagnosis, we want to close the entire school. That just makes no sense.
The mayor disagrees with companies that are telling employees to resume working from home, saying the city needs to keep the downtown businesses they patronize going. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, along with Tim Stanovic. I'm getting the hang of this. I'm trying to remember how to do my job.
How many years have you been here?
22. This is my 22nd year.
Congratulations.
October. It feels great. It's a great place to work. I work with great people, and it's a lot of fun most days.
Well, I love working with you. It's good to be back with you in the new year. Hey, you were talking a little bit about supply chain, and we were talking a lot about supply chain just now with our friends from Bloomberg TV.
Right.
Check this out. This story caught my eye earlier in the day. No end in sight for auto sales slump on chip-constrained output. So we've talked a lot about, what did Michael McGlone say? The cure for high prices is high prices, right? The idea that more producers come in when prices go higher. Save for chip production because it's so complex and difficult to do.
It's so funny. My daughter, first year in college, she's taking economics and loves it. And I'm so proud because that's my degree. But she was doing microeconomics and she's like, okay, so Mom, so we go through she's explaining it all to me. And it's like so much of what's going on in supply chain.
I have to pause and just share a story from traveling with Carol back in October. On the phone, doing economics, helping out her daughter with her economics homework from the airport, LAX, as we were waiting for a flight.
We were.
It was amazing.
We studied together. But what's funny is, talking about the charts, where prices hit a certain point, that encourages more providers, suppliers to come into the market.
But
right?
It does, but not if it takes 24 months to build a facility that builds chips, right?
But it seems like we're doing okay. Look at Tesla and their blow-away numbers. How is he figuring out the supply chain? What's going on?
You're right. That's a good point.
I don't know. I'm trying to understand. And like I said, I shop around or I'm online and I seem to see that there's lots of stuff out there. So I do wonder, is there something in this dilemma?
Well,
anyway, what?
Let me search some numbers here.
Yeah.
Car makers likely sold a seasonally adjusted annual rate of about 12.5 million new vehicles in December. That's down 23% from a year earlier. That's according to the average forecast of 6 market researchers. We're going to hear from new car sales on Tuesday from automakers.
We'll see what they have to say. I know there's lots of cars out there and people are buying, right? Used and new. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Apple tops a $3 trillion market value. Briefly, stocks come roaring out of the gate. The Dow, the S&P, NASDAQ, all advancing. Let's head right over to the first word breaking news desk for today's afternoon call. Happy New Year. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green today with the Dow currently up 185 points. S&P's gained 26, while the NASDAQ is higher by 182. The U.S. 10-year yield spikes to 1.63%. Gold is down 28, oil trading higher, and Bitcoin is falling by 1.6%. Among the main 11 S&P sectors, leaders were energy and consumer discretionary. Real estate materials were under pressure. And leaders to the upside in the Dow, Boeing and Goldman Sachs, while Home Depot led to the downside. Wrapping things up, Tesla jumped 13% after smashing its quarterly delivery record. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg Type Squawk SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Hey, so one stock we've been talking about already and watching, it's staying near its highs of the day. It's Tesla. Bam,
Yeah.
it's up more than 13% today.
Tesla smashing quarterly deliveries with a record of 308,600 cars. I saw Danahol's article yesterday, last night about this. I sent it to my team at Quick Take Stock, and I said, watch Tesla stock tomorrow and see what happens after this. Let's bring her in now. Dana Hull is technology reporter for Bloomberg News. She joins us on the phone from San Francisco. Dana, you've been covering Tesla for years. This number, as you write, surpassing even the company's own expectations. Were you pretty blown away with it?
I mean, it was a very strong quarter. It really begs the question, like, why did the analysts get it so wrong? I mean, it's like it's this expectations game where, the analysts put out, analysts have their own models, and then Tesla itself sends around its own consensus figures, which is sort of broader. But I mean, they beat by like 45,000 units. Like, it's rare to have a beat that's quite this large. Our Bloomberg consensus figures were 263, and they delivered 308,600. So I mean, that's like a pretty significant beat. And I think it just shows that despite the semiconductor shortage, despite COVID, despite logistics, that there is demand for electric vehicles. And, I would love more visibility from the company as to how many of these cars were sold in China. We don't have a lot of visibility into the regional breakdown. But, this is big for Tesla. I mean, the transition is here, and we're just sort of seeing that accelerate quarter after quarter.
All right, so already up 13% this year because it's the first day of trading. We've got a $1.2 trillion market cap, Dana. You mentioned you'd like more visibility in terms of the geographic breakdowns. Why? What are you looking for specifically?
Well, Tesla just, their report is just very bare bones. It's like, we sold this many cars this quarter and this year, and like, we'd like to congratulate everyone on the Tesla team, but they don't say where the cars are going. And you can usually find it in the 10Q, which will come out after earnings, where they break down what their largest markets are. It's traditionally been the U.S., then China, and then like Norway or the Netherlands. But I mean, I'm just curious. Like, I mean, is the U.S. still on top? Has China overtaken the U.S.? I mean, how? I just don't know. We really don't know, and so you have to kind of piece together market data from a lot of disparate sources. And given that Tesla is the market leader, I just would love it if they would be more transparent about what is their top market. And I think that's just information that everyone would know, because people get very hung up on like monthly sales in China. But then because of the logistics of shipping cars, the monthly sales aren't always super accurate. So I don't know. I would just love more from the company. Maybe we can press on that during earnings.
Yeah, and I mean, Elon Musk might not be on the call, right? Because he's kind of...
Oh, no, he will be on this call. He tweeted that he's going to come on the call. So he was... I mean, it's so funny. Like, Elon loves the limelight. So he made this big thing of saying, I'm not going to be on the call unless I have something to say. He was not on the last earnings call for the first time in a decade. But then in November, he tweeted that he would be back on the call in January with a significant product update. So the first call of the year, he will be on the call. He will be on the call.
Dana, what do you think? Is it something about a Cybertruck, perhaps? That thing still hasn't made an appearance.
Yeah, I mean, Tesla has not. So I think that I would imagine. I mean, Tesla has all of these vehicles in the wings: the Cybertruck, the semi-truck, the next generation Roadster. They've talked about making a cheaper car in China. I mean, maybe they'll make a delivery van. I mean, who knows? But the truck is clearly the next car in their product pipeline. And this is the year of the electric truck. I mean, you have the competitors like, Ford and Rivian all coming out with their trucks. I mean, they're already out with their trucks. Like the Rivian truck is out. And so I would imagine that the Cybertruck will be a significant part of that.
Is this a make or break? Maybe that's stupid to say, but I mean, I feel like it's going to be a significant year for EVs overall, Dana. And, when I think about Mercedes, we've talked with them and they've got an EV and we're seeing that higher end market certainly get more competition, increasingly so. How is that going to make things more difficult for Tesla potentially this year?
Well, I've sort of argued this for a long time, and I'll make the argument again. I think we need to kind of shift the way that we think about competition. The competition is not EVs and EVs fighting each other. The competition is really EVs versus ICE vehicles. So as more and more people make the shift to EVs, the kind of share of the EV pie is going to continue to grow. And that's actually good for Tesla. Like the more that EVs become normalized, the better it is for sort of everyone. So I mean, Tesla might quote unquote lose market share to other EV makers, but they will continue to grow sales year over year, if that makes sense. I mean, like they grew sales just a phenomenal amount this year, and coming into the new year with 2 new factories coming online, they'll be able to continue to do so.
So, Dana, to that end, I've been asking the question to other people today. Is there a chance that Tesla sometime soon becomes the company that produces more vehicles than any other automaker in the world?
Well, they have a long way to go to get to that. I mean, like, compared to like Toyota and Volkswagen, but do they make the most EVs in the world? Absolutely.
Yeah, it's fascinating. There was a column, I think, too, on the Bloomberg that just says people thinking about their cars, you have to be thinking about if you buy a new car today, what's the resale market in 5 or 6 years when you typically often sell off a car?
How's the battery doing?
Well, but not even that. Like, are you going to want to buy an ICE, right, an internal combustion engine, when maybe in 5 or 6 years nobody's going to want them? And so that just kind of pumps up the demand for EVs. But there is that battery story too. Dana Hull, she's the best. She's Bloomberg technology reporter. We love talking all things Tesla and Elon Musk with her, and so much more. Stock is up by shares of Tesla. That is 12.6% as we speak. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hey, we've only got about 29 minutes left in today's trading session. We're going to have one trading day down already for 2022.
Yeah, right now, stocks looking pretty good, at least if you're not listed on the NASDAQ, higher by more than 1%.
Yeah, those big tech names and others really outperforming. Hey, we're going to talk about the chart of the day in just a moment with Kriti Gupta. But in the meantime, let's get back to your top business stories. Check in with Charlie Pellet.
Hi, thank you very much. Happy New Year to you all. I love you guys, and I'm glad to get to work with you. Here's what's going on. We've got the Dow, the S&P, NASDAQ all advancing. S&P up by about 0.6% right now, up 26 year to date. Dare I say that? Up 0.55% on the S&P. NASDAQ up today by 1.1%. The Dow up 204, rallying by about 0.6%. Equities gaining, treasuries though extending losses as traders brace for the start of a potentially volatile year and 3 expected rate hikes from the Federal Reserve. We've got gold down 1.5%, 18.02 the ounce. West Texas Intermediate crude up 1%, 75.99 a barrel. Tesla, big story. Deliveries reported over the weekend. Shares surging now by 13.1%. You think you're having a nice day in the market. Elon Musk adding to his lead as the world's richest person after Tesla reported it smashed its previous record. Musk's fortune jumping $30.5 billion today, that according to the Bloomberg Billionaires Index. Weather and labor issues aside, lots of questions about air travel given the rise in Omicron cases. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
So someone who's vaccinated and boosted and masked in an airplane, that is not a very high risk for sitting there. I think it's pretty low. And again, it boils down to risk tolerance. People who want to avoid the virus at all costs, no matter what, they're going to be stuck at home. But you can now, and I think as we get to 2022 and we say, look, we're going to go back to living our lives, we're going to figure out a way through this, you have to take calculated risks. And air travel, I think, is reasonable under the circumstances.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Vaccine stocks trading lower. Pfizer shares down 4%. Its German partner BioNTech, its ADRs down 9.2%. AstraZeneca's ADRs down 0.1%. Moderna lower now by 7.8%. J&J Johnson & Johnson down 0.1%. Recapping stocks higher. S&P on this first trading day of the new year up 26 points, up 0.6%. And that's Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Kriti Gupta from Bloomberg Markets is joining us now, as she does each and every day just before the market closes. She's got her chart of the day, and today's looks at the ongoing trade war. It's not seeming to phase stocks.
No, it's not. What trade war, right?
Yeah,
I don't even feel like
exactly.
we're dealing with them. But
what is this, 2018?
I know, kind of. It doesn't even feel like it, but it kind of is because a lot of the tariffs, a lot of the geopolitical tensions that we had about 3 years ago, well, they're still there. They didn't go anywhere.
Right.
But they have kind of lost a little bit when it comes to priority in the news cycle, when it comes to what is actually driving the stock market in particular. So I decided to look at some of the stocks that were exposed to China. And I'm not talking about Chinese ADRs that are listed in the United States. These are companies like casino makers, casino operators, chip makers, Boeing, for example, which gets a good chunk of their revenue from China. And Goldman did us a favor and put this all into a
real
fun
exposure to
basket.
China, right?
Real exposure to China,
From
where
the
their sales are coming.
Like that.
So Goldman did this really great thing where they put into a little basket for us and said the median stock in this basket has 22% of their sales derived from China. That is a pretty big chunk when you think about it. So I decided to use their basket and put it in comparison to the S&P 500. I did a ratio here to see its outperformance. Has this basket been doing better or worse than the S&P 500? And you can see on the chart for our radio audience, basically the line just goes down and down and down in 2018, 2019, 2020, because that's where, well, until 2020, because then you have the pandemic start. But in 2018, 2019, really at kind of the peak trade war, basically, for lack of a better term, you saw a lot of those stocks kind of trade in line with developments of the negotiations that were going on between the Trump administration.
It was pretty heated. It was really uncomfortable.
Yeah, it was moving the stock market every single day, the volatility. And then the kind of election happened in the late 2020, and you also saw the pandemic kind of become front and center. And since then, these stocks have actually outperformed the S&P 500.
That's interesting.
If geopolitics don't even matter. And I should remind our audience here that you still have tariffs on both sides, about 20%. I believe when it comes to how much the U.S. is charging China and China charging the U.S. when it comes to imports. And the Peterson Institute actually did a survey or did a study on how much this is costing American importers. 90% of costs are being eaten by U.S. importers. So this is still having a very tangible effect on the bottom line.
And yet we have higher, okay, so you're saying there's higher prices, but the importers themselves are...
Importers eat them, yeah.
Okay. But, I mean, they have to be passing on some of those costs to consumers. At least that's what they were doing in 2018.
Yeah, they
were
could
paying
be.
more for
We
goods.
don't know, but it's not showing up in the stock market because these stocks are continuing to rally and rally
Why
and
are
rally.
they? Because they're able to... Why?
Because it's not trading on geopolitics at all. It's trading on earnings. It's trading on things like defensive stocks, on theme trading. I mean, look at some of the names in these companies. Boeing, for example, has actually been stronger in line with the recovery trade.
What's going to be interesting, and we have some great reporting on the terminal. I think it might even be the big take about the things that to worry about. And one of the things that they're worried about is slowing Chinese growth. And you do think about what happens to these companies if we see dramatic slowdowns in the growth over in China, specifically when you've got some of these U.S. companies who have so much exposure to that nation.
Yeah, that and add on to the fact that they have now a zero COVID policy. So some of these ports that U.S. importers are so dependent on, well, they're shutting down. So it really brings to the question, do you start to bring supply chains closer to home? What?
Do we? I don't know. I've been asking that question since like April of 2020, right?
True. Well, some of them have, right? We had a story that caught my eye a couple weeks ago in that a lot of supply chains are being brought to Mexico or to Canada or back on U.S. soil because they want to make it easier to transport to the end consumer.
Like that helps. Good luck getting a rapid COVID test right now, even if they're made in Maine.
Like, you know, they have restocked
I know
them.
somebody who has a bunch.
I was really happy.
Wait, where did they restock them? Where can we get some?
Dwayne Reed around the corner.
No!
Yeah.
57th Street?
Why shouldn't we announce this on radio?
Is it 57th Street, 2nd Avenue?
59th Street. I saw this over the weekend.
Don't go there. No, we mean the one up at 164th Street. We're just going to say. No, it's interesting. But that's the other thing, though. Things might be out, but they get replenished. So we do continue to see goods coming in.
They do. And a big piece of this also, and I'll just quickly say it because we only got about 40 seconds left, but I really want to mention this in my
I love
story
somebody
of the
who
day.
watches the clock with us. Thank you.
I've been trained by the best. Well, AT&T Verizon, for example, they're dealing with the FAA and all, but the reason that they've cited why they want this 5G rollout to happen so quickly is because they're actively competing with China to build out their 5G network, and that was one of the reasons they've given to the government to say, hey, we got to get this going because we have to beat the 5G rollout with China, with Europe, but particularly China is the one that they mentioned.
All right, out of stock on Walgreens and CVS. Okay.
It's like out the door on there. Master's going to be out the door, too. All right, Kriti, thank you so much. Have a good evening. Kriti Gupta, of course, Bloomberg Markets correspondent at Bloomberg News.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. The FDA is expanding eligibility for Pfizer booster shots for use in 12 to 15-year-olds. Teens 16 and up are already eligible to get a Pfizer booster along with adults. It comes as the nation battles the Omicron variant and more kids are being hospitalized. A major winter storm has shut down much of official Washington today, but when Senate Democrats get back to work this week, they'll pick up where they left off in 2021, looking for a path for President Biden's stalled economic agenda. Brown University political scientist Wendy Schiller says Democrats need to focus on what matters to voters.
They send their children to school. They want them to be safe. They want them to be safe from COVID. They want them to be safe from gun violence. And that feels like it's slipping away. You can't go to work because of COVID. The vaccines work, but they don't work perfectly. Again, that can be attributed as a government failure.
Wendy Schiller at Brown University. New York's Attorney General is digging deeper into former President Donald Trump's business practices. We learn more from Bloomberg's Nathan Hager.
Attorney General Letitia James's office has issued subpoenas to Ivanka and Donald Trump Jr. as part of her probe into whether the Trump organization manipulated the value of key assets for tax and insurance purposes. The AG has already demanded the former president's testimony by this Friday. Trump sued James last month in a bid to block her probe, accusing her of political motivations. The former president's other adult son, Eric, testified in October after fighting to delay the questioning himself. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, Tim Stanovic in our Interactive Broker studio. We are also streaming on YouTube, so you can catch us there. Fun stories, a lot on the Bloomberg today and at Bloomberg.com about, you know, Wall Street firms, financial firms kind of weighing in, okay, what's maybe ahead for 2022? What are the worries? What are the concerns? Morgan Stanley also weighing in.
Yeah, Morgan Stanley says the time is ripe for, quote, bottom fishing stock losers. So U.S. stock investors can add some more spice to their choices as a new year begins, and the pressure of keeping up with index eases. That's according to Morgan Stanley strategists.
It's interesting. Part of my gainers was some of the media stocks because names like, I think, a Viacom, CBS, a Discovery did not gain in 2021. And so you did see a bit of a rally in some of these names. So you do wonder some of the names that were really didn't do well last year, whether they become opportunities in this year, kind of your value play finally.
Peloton, down more than 70% in 2021.
I feel like that is very much a fundamental story.
PayPal, that was one of the worst performers on the in the NDX.
That's kind of surprised, don't you think so?
Yeah, it was PayPal's worst year since spinning off from eBay.
Wonder why that was. Why was that?
I don't know.
Competition, people not using the service, more. I don't know. That's interesting. So, all right. So Morgan's though saying look for some of those losers from last year. Here's what they wrote. A couple of strategists put out a note to clients today. As we enter 2022, the key let's try that again. As we enter 2022, the key question for investors is to decide if they want to stay with the relative winners or is it time to start bottom fishing for losers. While we continue to favor the large cap defensive tilt that has been working, we recommend creating a barbell with stocks that have already been hammered but offer good prospects at a reasonable valuation. The other thing I would say is how many times have we talked about or talked with guests who said, it's time for the value guys, it's time for the value guys.
It's a stock picker's year. Also, hey, I want to get to this PayPal question because you were asking about it. PayPal's up 3.5% today after BMO raises it to outperform because of a valuation upside.
So there you have it, right?
Yeah.
And that's the story. And as you said, it was not a good year for it last year. It was down, 20% or so. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. The Bulls poised to put one in the win column here with the Dow up 210 right now, up 0.6%. S&P up 25, up 0.5. NASDAQ up 163, up by 1%. 10-year yield 1.62%. Spot gold up 1%, 75.99 right now. 1804 on spot gold, down 1.4%. Crude oil is higher by 1%, 75.99 for a barrel of West Texas Intermediate crude. To be clear, gold lower by 1.4%, crude oil up by 1%. Again, worth repeating on the 10-year, 1.62%. S&P up 26 points, up 0.6%. Tesla surging after deliveries, topped estimates up by 13%. Apple briefly hitting $3 trillion. Apple shares up 2.3%. And that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. In recent weeks, Democratic officials in New York and California have advocated granting individual citizens the right to sue manufacturers of assault weapons and ghost guns. The effort imitates a constitutionally dubious anti-abortion law passed in Texas earlier this year, which the Supreme Court has allowed to stay in force while challenges against it continue. Officials in blue states are now seeking to apply the same legal logic to guns. This is a mistake. More aggressive action to curb gun violence is undoubtedly warranted, but success will require not just boldness, but pragmatism. Promoting legal vigilantism to get around constitutional protections and federal laws is not the way forward. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 10 minutes left in our trading day. We've got stocks really hovering near their highs of the session. I thought I had seen that we could see maybe records, is it, in the S&P 500 today, but we'll keep an eye on that for you. Is that possible, right?
Yeah, and by the way, this is still a Santa Claus rally. We got one more day.
He's gone back to the North Pole.
The technical definition of a Santa Claus rally includes the first 2 trading days of the new year.
Aye, Captain. All right, market captain. All right, let's get to it with Steve Brown. He's Senior Portfolio Manager at American Century Investments. They've got $250 billion in assets under management. He's co-manager on the company's real estate fund and the global real estate fund. That latter fund, by the way, beating most of its peers over the past 5 years, returning on average annually nearly 14%. He's on the phone in New York City. Hey, Steve, how are you? Happy New Year.
I'm great. Happy New Year to you, too.
All right, so some optimism in the markets despite yields moving up. It's been an interesting first day, but a first day does not necessarily make a market year. What are your expectations as you look at 2022?
Sure. We had a very strong year in 2021. And as we step into 22, we see a couple things that are still in place. We see
REITs were really strong last year, right? I mean, if you look at one measure, I think it was up. I look at the Dow Jones Equity REIT Total Return Index up 41% last year. That's a big bump.
Yes, they were one of the worst performing asset classes in 2020, so they did have a big bounce back. But in general, a couple of the drivers for strong performance are the inflationary trends, a lot of liquidity, and demand being stronger than supply in many property types. And as we enter 22, a lot of those factors are still true today. Demand is greater than supply for many property sectors in regions of the world. And, as we sit here today, inflation is still running, 5, 6, 7%. The Fed is taking actions to address it. But I think in the first half of this year, we're going to continue to see inflation relatively strong. And there are a number of property sectors that have been able to raise rents, at the same level as inflation. So they've showed some very good earnings growth, both in 2021, and we expect to be that case in 2022 also.
Okay, so where does the Fed come into this, and where does monetary policy come into this? Because I know from your notes that our producers gave us that you still expect easy money policies to continue throughout the world, even though we see tightening happening.
Sure. My point is that last year, 2021, we had extremely easy money policies. And this year, 2022, we expect to have easy money policies. So
from extremely easy to easy.
Still easy.
Yes. Yeah. So there's still a lot of liquidity out there. Rates are still very low. I mean, the Fed wants, has said, or the bond market has said, that the Fed may raise the Fed funds rate 3 times this year, maybe up to 75 basis points or something like that. And the 10-year, it's around, like you said at the top of the hour, it's about 1.6% right now. If that drifts higher to 2% or so, I mean, that's still a very accommodative environment for economic activity as well as real estate activity.
You have noted, as Tim mentioned, some of the research you guys shared with us and some of the notes, that property owners continue to benefit from demand being greater than supply in many markets. You mentioned it earlier. REITs, there's all kinds of REITs, right? There's commercial, broadly speaking, but you could break it down into hospitality. You can break it down into office properties. You can break it down into retail. Where are we seeing demand in particular being greater than supply in many markets, or even geographical variations?
We see, generally speaking, demand being greater than supply in rental housing, industrial, and self-storage, to name a couple 3. And let me go back to the first one, which would be rental housing. This could be off the apartments, it could be single-family rental properties, or it could be manufactured housing. They're all benefiting, these property owners, these real estate companies, from demand being greater than supply and the ability to raise rents at a higher rate than inflation. They're also being benefited by high home prices. I mean, home prices were probably up 20% or so in 2021. We don't expect that type of appreciation in 22, but there is still a very good demand for rental housing, and there remains in most parts of the world a shortage of affordable housing.
I know a lot of people who are selling their homes because they know that they're either going to move in the near term or something, and taking advantage of a market that is just
and
off
they're
the
selling
charts.
and renting?
Yep.
There are those serious tax implications to doing that, right? If you take the gains and you don't actually buy new property.
That's true. That's a good point.
Yeah, I mean, but we're seeing in general is that it's still relatively cheaper to rent than to buy because of the hurdle of putting down 10 or 20% as a deposit. So it really has opened the runway up for continued strength in the rental apartment market, whether it's in New York or the Sun Belt or other parts of the country.
Hey, Steve, let's talk a little bit about retail. And Simon Property Group is among your top holdings here, and I'm wondering how you're looking at retail and a recovery in retail.
Sure, retail REITs, whether it was Simon or some shopping center REITs, performed very well in 2021. They bounced back from a disastrous 2020 as the economy generally reopened, both in Europe, Asia, and in North America. So the stocks had a good bounce. As we sit today, we're still constructive on them for a couple of reasons. One is there's been a lot of leasing activity in 2021, and that should flow into 2022 into higher occupancy levels. Secondly, there have been very few store closings or bankruptcies on the part of retailers. So I think as we enter the peak store closing season, which is typically the first quarter of the year, store closing is going to be very low. And then thirdly, generally speaking, consumers are in good shape from a balance sheet perspective, so they have plenty of spending power. And so that combination of events, rising occupancies, lower store closings, and a healthy consumer, bode well for both consumer spending, but also for rent growth and NOI growth on the part of a Simon Property Group or some strip center names like a Kimco or a Kite Realty, which own grocery-anchored shopping centers.
What's your favorite space when it comes to REITs or within the commercial real estate market or even residential? Just quickly.
Sure. We still like industrial for a number of reasons. Demand is clearly greater than supply there, and the demand drivers of the growth in e-commerce, generally speaking. And it's not just Amazon or Shopify. It's also the traditional players like Walmart and Target. Really emphasizing delivering the goods to the consumer in a shorter time. And the backup in the ports has put more pressure or more emphasis on getting the goods into the warehouses so these retailers can control the destiny a little better.
All right. Listen, Steve, thanks so much for joining us. Steve Brown, Senior Portfolio Manager at American Century Investments, $250 billion in assets under management, joining us on the phone from New York City. We do this with stocks pretty much hovering near their best levels of the session. All right, folks, it is time for Beyond the Bell, our cross-platform coverage of the market close on Bloomberg TV, radio, and on YouTube. Let's head on over there now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day, the first trading day of 2022. Romaine Bostic is here. Caroline Hyde is back. Taylor Riggs is back as well, counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast team. We're joined right now by a tireless Tim Stenovic and a big hearty welcome back to Carol Masser, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse the crucial moments of the day.
Wow, I'm excited.
I'll have what he's having.
Very well done.
No, it's a great day. There's going to be a lot of hay made about how much further this market can really go, coming off a 27% run up last year. But we're starting the year off. Look, 0.5% doesn't seem like much, but we're right around that record high.
Not too shabby, but let's dig a little bit deeper. If you look into some of the internals, and I know we're going to get into that in just a moment, but I look at just superficially the S&P 500, 247 names are higher, 257 are lower. So it just shows us kind of a split market. Not every name, Tim, is gaining today.
Yeah, but a pretty good day for those mega cap consumer discretionary and tech companies, with companies like Tesla, Apple, Amazon, and Nvidia all continuing to pull the NASDAQ higher. And that's why a lot of the reason why we're seeing that outperformance when it comes to the NASDAQ today.
What's also at session highs, yields on your 10-year up 12.5 basis points. We're currently seeing up 13 basis points on the 30-year. There is a key story for 2022, Taylor.
And it was so interesting. I was speaking earlier with Priya Misra. We know her, of course, from TD Securities. We interviewed her earlier on radio, and Romaine, she says, always be careful to take a look at these one-day moves. This could be a little bit of a repricing, but we beg to differ that if we didn't talk about this and how it relates to a Federal Reserve, if we're thinking about ending the taper in March and then maybe a move on the rate hike shortly thereafter, certainly hard to ignore treasuries at these levels.
All right, well, I don't know how things went in Idaho, but here in New York, we hear those closing bells. That means the market is actually shutting down here on this first trading day of the year, and everything is pretty much higher across the board, at least as far as the major indices. Dow Jones Industrial Average up 246 points or 0.7%. S&P up 30 or 0.6%. The NASDAQ Composite up about 187 points or about 1.2%. And even the Russell 2000 getting in on the action, up about 27 points or 1.2% here on the day.
S&P at a record on this first trading day of the year. Hey, also good to be a semi stock today, because the Philadelphia Semiconductor Index was up about 2%. If you're a name like AMD, you were up more than 4%. So we really saw that sector, guys, certainly moving up here.
You know, Carol, I'm going to steal your thunder as well when we talk about AMD, right? Some of the big gainers on the day. Tesla, dare I say it, as well as the auto components. On a sector level on the S&P, these are up 11.5%. That's pretty much just a few companies we know of in that index that is pushing that higher. Otherwise, it's energy. Energy, Carol, of course, as we know, coming off one of the great years last year, that continues to stay up 3%. Banks as well, because that's such a yield story. As we've talked a lot about yields higher, bond price lower. And of course, that leads to the bottom of the screen, right? With real estate utilities off about 1% or so. Always typically the underperformers when yields are climbing.
All right. And Taylor, you mentioned Tesla. I'm going to go there again, if I may, up about 13.5%. So pretty much finishing at its highs of the session, top in the S&P 500 and the NASDAQ 100. We've been talking about it all day today, about those blowout quarterly deliveries. I mean, analysts weighing in on this, they were blown away by it as well. And that market cap easily staying above, easily staying above that $1 trillion mark. So interesting. And I thought it was interesting, too, that they don't seem to be having those supply chain problems that so many other companies and automakers in particular have had. Staying with that, and perhaps because of Tesla, we saw Lucid Group also higher in today's session, up 7.6%. It was also named, the Lucid Air was named the Green Car Report's best car to buy in 2022. So we did see that. And we also had a Citi analyst resuming coverage with a buy on that stock and a street high price target of 57. 37. Lucid closing at 40 and change in today's session. Just quickly, we did see a value play, if you will, at work today in terms of the media companies, which didn't do necessarily well last year in 2021. Viacom CBS up almost 7% in today's session, and this was top among the S&P. And I do wonder, you guys, if we're going to see more value names gaining in today's, not today, but in 2022.
And we should point out, Apple did close at a record high today at 182, though still shy of that $3 trillion market cap.
Yeah, incredible. It went from a $600 billion company in the last 5 years to a $3 trillion company in just 5 years. Hey, let's talk a little bit about the stocks that were the worst performers in the S&P 500 today. Let's start with Microsoft, because for those mega cap tech companies, it was a relatively good day for companies like Apple and NVIDIA. But Microsoft actually saw a little bit of a decline, close to 0.5%. Microsoft, we should note, has risen for 10 straight years, including 9 with a double-digit positive return. It was up over 50% in 2021. We did see a little bit of selling today. Pfizer shares were lower on the day today, as well as Moderna. We're watching those vaccine makers of Moderna down 7.4%, and Pfizer finished the day down a little more than 4%. Interesting to keep in mind as we continue to see regulatory approval for other vaccine for boosters for younger people here in the United States.
Yeah, all eyes on that, particularly those with kids. Meanwhile, I mean, if you are long the US dollar going into 2022, and it is one of the most popular trades for the leveraged funds out there for this particular year, you've had a great start to the year because the dollar index is up 0.5%. Best day in a couple of months for the US dollar. Cracking as we see it move higher as the back of yields pushing up. What's doing poorly, therefore, in the G10 space? Canadian dollar off by 0.9%. Remember, we've got OPEC Plus tomorrow. We've got Aussie dollar off by more than a percentage point. Remember, Australia, New Zealand, Japan, they're all still closed for holidays. China too. But we did see basically a real move in to what is king dollar. Many anticipating that for the rest of this year. And then, of course, that meant that metals had a bit of a poor day. Gold having its worst day in 6 weeks, we understand. Iron ore actually off by more than 1.6%, though many had felt that maybe iron ore would get a little bit more of a good turn coming from some demand coming from China. I'm looking at the likes of Brent crude up 1.5%, still cautious trading. $78.96 is where we trade on the back of hopes of OPEC Plus, maybe still managing to improve supply a little bit. Nat gas getting a push higher as the cold weather hits us here on the East Coast. I'm looking also, though, at what a significant day it was for sovereign debt. We saw yields push up across the board, but really it is the 13 basis point move that I see on this particular complex for the US 30-year that catches my eye, Taylor.
Oh, indeed, Caroline. You know, Romaine always gives me a hard time because we haven't broken above 2% on the 30-year. And finally, we did for the first time since about November or so, and still the highest going out on that long end of the yield curve since October 26. But Carol, it really is the short end of the curve as well. I know that we're awaiting a Fed meeting in January, but a really important one, perhaps maybe in March. And it's the 2s and the 5s that are now looking at the highest yield that we've had since before the pandemic, looking back to levels since February of 2020. So that really puts you back into where we were in that pre-pandemic era. And what this means, but I can't quite figure it out. I don't think the narrative changed today versus on Friday, but perhaps maybe just a repricing of how we're looking at maybe higher growth, higher inflation on the year.
Yeah, well, you know what's interesting? On a day like today, you do wonder, okay, how much of what we're talking about, whether it's gains in the equity markets, it's yields moving up, how much of it stays with us? And I do wonder, not to move too ahead really too quickly, but how much by next December are we going to be talking about this? Like what happens today that really indicates what this trading year will be like? And I think there's so many questions out there. We've had a lot of stories on the Bloomberg that kind of speak to that.
Yeah, and I think, when you talk about that move higher in yields, you have to put it into perspective as to how low yields have been. So even if you do see nominal rates come up, you see the Fed funds rate actually come up here, it's unlikely that we're going to be, sort of at any sort of high level by a historic basis. Not like we're going to see 5% rates or something on a 10-year. If you get 2% or even a 3% here, that's still relatively manageable. Does it change some of the valuations, multiples that you pin to some of the really high flying stocks that really didn't have the profitability or the margin expansion? Yeah, maybe, but the rest of the companies, they'll probably be fine.
And also, how much does this then just attract in more demand from overseas in particular? Is this why we've been in such a trading range in terms of US debt? Because, well, where else do you put your money? You've got negative yields negative nominal yields over in Europe.
Right now.
Huh?
What are they over in Britain? Is that, or I'm sorry.
Germany's still
like
negative
4
12
countries,
basis
so do they
points on
each
the
have their own
10-year.
sovereign debt?
The
How does that
UK.
work?
You're at 97 on the 10-year, Caroline.
Yeah, and in a real basis, when you've got inflation more than 5% over there, that is deeply
Caroline
negative.
didn't answer my question.
Hey, I just want to end by
basis.
I want to end by taking us back to thinking about the first trading day of the year and what that means a year from now, because we do have a lot of calls coming out from analysts saying where they think the S&P 500 will be a year from now.
Did you know Tim
remind
and I
everyone to
spent
take
New Year's Eve together?
What's that?
Tim and I spent New Year's Eve.
We did.
Was there champagne and strawberries? That's all I want to know.
For one of us. Yeah.
I guess just one. I didn't even make it till midnight, Romaine.
That's what happens when you have a little one. No, but it's interesting. Like, I love that. I lost him. We've lost him, guys. We've lost him. But that whole big take story about what everybody's looking for in this year. I mean, there's just so many things out there that we've got to figure out. There's still a lot of questions.
Yeah.
Carol, that's a great quote from you.
I know.
That's what happens when you have a little too much wine.
I said it happens when you do streaming.
I'm never
going to
let you
week or
live
so.
that down.
I think it's a little bit too much wine or a little one, which is like a small child, which always makes you go to bed before midnight.
I think both.
I had a great red on New Year's. I'm just going to put it out there. All right, guys, we got to run. We will catch you. That's a wrap. Our market wrap, our Beyond the Bell coverage, our cross-platform coverage on radio, on TV, on YouTube. We'll catch you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I do feel a little rusty.
Well, you know what? You know who doesn't is the equity indexes today.
No,
talk about a start to 2022.
Yeah.
I keep saying 20. I'm still writing 2021 on all my checks.
You still writing checks?
No, I'm not writing checks at all. It's just an expression.
I think
Carol.
I know. All right.
But what I was going to say is you want to take these with a grain of salt, because last year, even the highest S&P 500 targets, those from Goldman Sachs and more, had it at 4,400, and the S&P 500 closing just below 4,800 for the year.
What have we learned that? Right. I mean,
crystal balls were a little foggy.
Right. Exactly. And I will still argue that we are still in an environment that it's still difficult to predict. We're still getting out of a health pandemic. We're still in it.
Omicron, anyone?
Yeah, exactly. Just look at the case count, guys. All right, let's get back to world and national news. For that, Nancy Lyons. She's in D.C. Hey, Nance.
Hey, Carol. The U.S. is expanding COVID-19 boosters as it confronts the Omicron surge. The Food and Drug Administration is authorizing extra Pfizer shots for children as young as 12. Boosters already are recommended for everyone 16 and older, and the FDA says they're also warranted for 12 to 15-year-olds. The FDA has also revised its general booster policy, saying anyone can get a booster shot 5 months from initial vaccines, down from 6 months. Newly sworn-in New York Mayor Eric Adams tells Bloomberg's Balance of Power it is time to face the reality we need to learn to live with COVID, and that means keeping the nation's largest school system open.
Our city and school system must open. We must continue to focus. We can't lose 2 more years of education for our children. It's hurting them socially, academically, and it also impacts on families.
Adams says it's also impossible to run the city from home. New York Attorney General Letitia James is seeking testimony from Ivanka Trump and Donald Trump Jr. as she continues to look at whether Donald Trump's real estate business manipulated the value of key assets for tax and insurance purposes. Donald Trump was already called to testify. President Biden says his administration is taking steps to reduce rising meat costs, saying the industry's growth has been stifled by the lack of competition.
4 big corporations control more than half of the markets in beef, pork, and poultry.
Biden says he's offering $1 billion in aid to independent meat and poultry producers in order to ease meat prices for consumers. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, folks, you are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic in our Interactive Brokers studio. So where are we going?
Okay, well, we're talking calls for 2022, okay? We're seeing a lot of optimistic calls.
There's just a few out there.
Yeah, we're seeing some optimistic calls. I'll give you some numbers here. So Oppenheimer says, 5330 for the S&P 500, and, the S&P 500 right now is at what? Roughly 4,800.
That's pretty optimistic.
Yeah, so that's pretty optimistic. Morgan Stanley saying 4,440, so a decline from where we are right now. Gartman. Dennis Gartman, I should say, sees stocks falling 15% in 2022 on aggressive Fed hikes.
Listen, a name very well known to the Bloomberg audience. I've talked with him a lot over many, many years, and his Gartman letter that he used to write like it was a must read, It's interesting to see what he says. And I think many would argue that maybe a little bit of a pullback would make sense, or maybe an official correction to get maybe some of the fluff, or what some would call some of the fluff out of the market. He says stocks could face a slow, laborious decline this year as a result of a more hawkish Fed that may raise interest rates 4 times, according to Dennis Gartman. But I will go to what Romaine just said, that even if we get several hikes, even if you go up to 2% or something, it's still
2%?
low by, right.
I mean, you have to have more than several hikes to get to 2%, right?
Depending on what, if you do quarter points
Yeah.
or half points, could they do half points and be more aggressive?
1.5% by the end of the year.
But still.
Yeah, I know, that's low.
Exactly. And so, I don't know. We'll see.
Hey, we should note that Gartman admitted that he's been wrong for the past 6 months to call for a bear market, as he's done in the past. As the chairman of the University of Akron Endowment, he did reduce equity exposure by 10% to assure the foundation has ample spending money, but he said that the risk in this strategy is that they miss out on further gains.
I think it's
But they
safe.
have pension obligations, right?
Exactly. Yeah, absolutely. And you know, our Bloomberg Big Take about some of the things that are on the minds of Wall Street thinkers and beyond. And one of the things is a policy misstep by the Fed. So that is certainly something that could be tricky. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stanovic. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Equities climbed to a record, specifically the S&P 500 index and the Dow Jones Industrial Average. NASDAQ also advanced today. The S&P up 30, up 0.6%. The Dow up 246, beginning the new year with a gain of 0.7%. NASDAQ today up 187 points, up 1.2%. The NASDAQ 100 index up by 1.1%. And the SOX, the Philadelphia Semiconductor Stock Exchange Index, up today by 2%. 10-year yield 1.63%. Gold tumbled 1.5%, $18.01 the ounce. West Texas Intermediate crude up 1.1% today at $76.02 a barrel. Cannot ignore Apple. Its value topped $3 trillion, a first in corporate history. Apple shares did advance today by 2.5%. Recapping, stocks advanced. S&P at a record up 30, up 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. Well, prepping for this segment, I came across a Bloomberg story. It was from September, Tim. It was about a cross-border experiment of digital currency backed by the Bank of International Settlements and 4 central banks, and it showed that e-cash can lead to faster and cheaper global money transfers.
Yeah, I mean, it absolutely makes sense. It's very difficult. In the past, it's been very difficult to actually send someone who lives in another country money.
It's probably easier than exactly, right? And so you think about, and then who is excluded as a result of that?
Well, let's get into it with Shelley Swanback, President of Product and Platform at Western Union. Shelley joins us on the phone from Colorado. Shelley, how are you?
I'm great. Thank you. Happy New Year.
Yeah, Happy New Year to you as well. Help us understand where we are with cross-border transactions right now, because this was the promise, the great promise of cryptocurrency, the great promise of digital currency. But I actually came across an old email that I sent, that a friend of mine sent me. He was trying to pay me for concert tickets a few years ago. He lives in the UK. I live here in the US. It was really difficult for me to send him that money. I don't actually think he ever sent me the money.
Does he still owe you the money?
Yeah, but it's fine.
Okay.
Where are we right now?
Yeah. Well, I think, on the one hand, there's a lot of innovation and a lot of changes that's happening. And, on the other hand, as you said, it can still sometimes be difficult. And I think there's a lot of reasons for that. I mean, obviously, everyone who's involved in cross-border money movement wants to make sure that the money's crossing borders for good, right? So there's a lot of regulations and rules and things involved, and certainly technology's changing. And so just the connections between all the various banking partners or money transfer operators like ourselves at Western Union, those things have to be taken care of to make that a seamless customer experience.
How has COVID, and you actually joined Western Union during COVID, and I know you are very involved in helping the team work from home, but also launching new products. So what changed dramatically in how you work and how you all thought about what your business needed to be because of COVID, and maybe reaching a wider swath of people?
Yeah, well, like they always say, right, never waste a good crisis, right? And so I think that was our attitude in the early days of COVID, and my attitude was, time to rally around our customer. And customers had different needs in different parts of the world. In some parts of the world, there's still, only about 54% of the world's population uses the internet. There's a lot of people that still rely on physical and cash-based services. So it was important that we could communicate with our customers, and they knew which of our retail locations were open on any given day, and that was an ever-changing situation, of course, across the world. There were situations where we needed to figure out how we could do home delivery of cash, believe it or not. That's more complicated than delivering a pizza, as you can imagine, in places like Sri Lanka and Nepal and Jordan, in places where people were really relying on that service. And then other places in the world where we really needed to advance our digital capabilities so that people could confirm their identities and be able to transfer money digitally. And so there was a ton of focus about being able to make sure that our digital platform was available to customers in literally every corner of the world. And so a lot of it was just about breaking down those organizational silos. And as I always say, when things get hard, typically people say, let's a couple of us take this offline, the legal person, the compliance person. Yeah. And we said, we're not going to do that. We're all online. Let's solve it together.
Hey, Shelley, one of the promises of cryptocurrency has been that it will facilitate cross-border transactions. It'll make it easier. And what it'll essentially do is remove an intermediary, like a Western Union. How do you protect your company against that?
Yeah, I think first of all, it's early days, and let's see how that plays out. Certainly, one of the roles that we can play right now is not crypto for necessarily transferring money cross border, but some of our customers, may wish to invest in crypto, and so we could provide them the ability to. Many people talk about a cash on ramp and a cash off ramp as an example. So that may be one way that we help our customers participate in there. And then we'll see how things play out in terms of crypto being used for cross-border transactions. I think it's still pretty early days. You saw what happened in El Salvador. Different places across the world are kind of still experimenting with that. And as I said, it takes lots of different connections across different countries, different real-time payment systems and the like to make this a scalable solution.
Shelley, where do you guys take your cues from? Because I do think about, you mentioned El Salvador, and what's interesting is I do feel like those emerging economies, Africa, in terms of how they brought people into the financial system was through a cell phone, right? And apps, and China really jumping over, I feel like, credit cards and things, right? Again, using their phone for so many different digital methods. I mean, where do you guys take your cues from in terms of really figuring out, okay, where is all of this going? Because you do sound pretty hesitant about the impact of cryptocurrencies at this point.
Well, I would just say we haven't made it a primary focus yet for our business. We certainly have our eyes on it and have, we have a lot of active conversations and discovery underway in terms of how we may want to participate there. I think in terms of where we take our cues from, you said it well, which is there's different cues in different parts of the world. I remember in the very early days of digital, actually back when I was at Accenture Digital, and we found this in many industries where some of the emerging markets were just leapfrogging solutions and methods that were happening in the developed countries. And so Africa, of course, many years ago really got big into wallets. And so that's a big focus for our business in Africa, is making sure that people can send money from and to wallets and connecting with those wallet providers as an example. And it just varies in different parts of the world. I think the one thing that we see that's probably consistent across the world is that many people need choice, right? They need choice between digital and physical and any combination thereof.
Well, great to check in with you and hear what's on your mind and what you're seeing. Shelley Swanback, she is president of product and platform over at Western Union, joining us on the phone from Colorado. It's evolving.
It is. 2022 is going to be huge for this.
It feels that way, right? It certainly does when it comes to all things crypto. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, it's 4:31 on Wall Street, and coming up, we've got an interesting guest. She's really working with companies, and her company, I should say, is working with companies too, about really developing talent. So looking forward to see what she has to say, especially in this current environment.
Yeah, we're talking about Whitney Johnson, the CEO of Disruption Advisor. She's also got a new book out. It's called Smart Growth, How to Grow Your People to Grow Your Company. We're going to talk to her in just a few minutes. In the meantime, a check of how that record trading day ended up. Here's Charlie Powell.
I thank you very much, Tim. Happy New Year to you both. Dow, the S&P at records today. Right out of the gate, the bulls were running with the S&P up 30 today, up by 0.6%. Don't need to give you the year-to-date numbers. The Dow up 246 points today, up by 0.7%. NASDAQ up 187 points there, up by 1.2%. 10-year big story. The yield now 1.63% on the 10-year. Spot gold down 1.5%, 18.02 the ounce. West Texas Intermediate crude up 1.1%, 76.07 a barrel on WTI. Equities climbed to records. Treasuries extended losses as traders brace for the start of a potentially volatile year with 3 expected rate increases from the Federal Reserve. So where do stocks potentially go from here? Phil Orlando is Chief Equity Market Strategist at Federated Hermes.
We've got a 5,300 target on the S&P 500. Our 4,800 call, of course, for last year. So that gives us, roughly a 10% move higher. Now, 10% is pretty good, in a normal year, but it's not, the 30% we saw last year or the, 100% we've seen over the last couple of years.
So first day out, S&P now at 47.96, again a record, up 30 points, up 0.6%. 10-year worth repeating 1.63%. Tesla off to a strong start to the new year after the electric car maker smashed its quarterly record for deliveries in what one analyst called a trophy case performance. Today, Tesla shares surged 13.5%. Again, recapping equities higher with the S&P advancing 30 points to a record, up 0.6. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie. Well, we mentioned earlier our Bloomberg Business Week story on how kids are going into the office, actually office daycare, while their parents continue to work remotely from home. I find that.
Could you imagine if we had all of our kids running around here? I'm just trying to think of all the expensive art my son would break.
Exactly. Playing on the fish, the koi pile.
No, don't touch the fish.
Well, it's interesting. What we're seeing is the workforce innovating, adapting, changing. Workers are increasingly picking where they want to work based on the flexibility they get, Tim. A lot of that's going on.
Well, let's talk a little bit more about this with Whitney Johnson, the CEO of Disruption Advisors. She joins us on the phone from Lexington, Virginia. Whitney, how are you?
I'm fine, and nice to be with you, Tim and Carol.
Hey, well, Happy New Year. You're also the author of Smart Growth, How to Grow Your People to Grow Your Company. And to Carol's point, there have been a lot of stories about returning to work and what the new normal looks like, when we finally do get there. What is the right way for companies to think about tapping into their human capital right now to make sure that they're growing in the right way?
Yeah, I think one of the most important things for companies to remember is that growth for all human beings is our default setting. And one of the things that we're seeing coming out of the pandemic, and psychologists have seen this, the research, is that when you undergo severe stress, it can lead to personal transformation or post-traumatic growth. And so people not only wanted to grow, but now they're ready to grow as a consequence of the pandemic. We've been disrupted. We've dealt with it. We know how to disrupt ourselves. And so this so-called great resignation actually in many respects is the great aspiration. People want to grow.
Wait. What do you mean people want to grow? And why is it all of a sudden they're like, okay, we want to do it? Like, explain that a little bit.
Yeah, so again, it's our default setting, but the psychologists have seen that when people undergo tremendous stress, one of the things that happens is there is oftentimes, we talk about post-traumatic stress, but there's also post-traumatic growth. And so there's this sense of people now know how to do it even better, and they've seen that they were capable of doing it, much more resilient than they even expected. And so because of the pandemic, all this movement happened, whether we wanted it or not. And so now people are saying, oh, I can move, I can change, I can grow. Now I want to take charge of it. And so coming out of the pandemic, I'm not necessarily resigning from, I'm aspiring to something more.
Which is maybe why we've seen some people leave.
The Great Resignation.
Yeah.
Is that why? What's the connection there? Sorry, Carol.
No, don't be.
Our heads are in the same place.
Yeah.
We are. We are.
Yeah. So I think, there's a sense of, okay, people are leaving. Yes, they are leaving. But what they're really saying is, I am aspiring to something more. And so to your question of what employers can do is they can recognize that if they make it possible for people to grow, then they're going to not only be able to recruit great talent, but they're also going to be able to retain them. Because whether or not a person stays in an organization, working for a boss, working for a company, is very much dependent on, do I perceive that there is growth upside for me? And so if you will make it possible and very explicit that, yes, if you come here and you work for me, you will have the opportunity to grow, then they're going to be able to both recruit and retain people.
I do think you're spot on. I've had a lot of conversations with people who've actually left a place, and sometimes they're going back to school because they're like, okay, because I'm not growing anymore. I don't see the opportunities. I don't see the path. Like, where do I go next within an internal organization? Or they're switching departments because they don't see the growth or there aren't the growth opportunities. Is there always a case to be made, Whitney, that leaders and companies can always find new growth pathways for employees? Are there, in some cases, like maybe an Amazon distribution warehouse, maybe there is no path that you can go from, you know what I'm saying? Like, is there certain parts within an organization that maybe the growth path just stops?
Yeah, sometimes there isn't a path in that particular department or even in that particular organization. But one of the reasons that the S-curve of learning that we talk about, which is this very simple visual model that allows you to think about what growth looks like, and that's what we've talked about in our book, Smart Growth, is that it gives you this artifact or this model, this way to start a conversation with people on your team, so that if you are in Amazon distribution services and there isn't an opportunity to grow there, they can then say to their boss, it's not that I don't like Amazon, it's not that I don't like working for you, it's just that I need to grow. I'm not getting any more dopamine that comes with a challenge. And so then the boss doesn't feel like, well, it's not that they don't like me, it's just that their brain says, give me growth, please. And so then you can have this conversation of, oh, so what will growth look like for you? Maybe it's somewhere else, but then if it's somewhere else, you become the boss that the person remembers 10, 20 years later because you made it possible for them to grow, and they become an ambassador for you and for your organization.
And kind of pays it back or pays it forward, like in the company itself. Hey, listen, and forgive me for picking out Amazon. It was just a random example, but you played with it. Whitney, sit tight. We're going to come back to Whitney Johnson, her new book, Smart Growth: How to Grow Your People to Grow Your Company.
Well, let's head to Washington, D.C. for a check of the latest world and national news, where Nancy Lyons is standing by. Hey there, Nance.
Thanks, Tim. The jury weighing fraud charges against former Theranos CEO Elizabeth Holmes is unable to reach a unanimous verdict on 3 of the 11 criminal counts that she faces. Jurors informed the judge today in a special note. Bloomberg legal reporter Malathi Nayak has been following the 3-month trial and speculates on what's next.
It could be that the judge will move forward and call for a mistrial on the 3 counts where the jury is currently struggling. It's also possible that they go back and, do figure out some way to reach a consensus on 3 counts. So we'll have to see how things pan out.
Malathi Nayak says jurors have been considering the case for 7 days. Senate Majority Leader Chuck Schumer is issuing an ultimatum over voting rights. Bloomberg's Nathan Hager has more from Washington.
In a letter to fellow Democrats, Schumer says the Senate will vote to change its rules by January 17th, the Martin Luther King holiday, if Republicans continue to block voting rights legislation. Schumer says last year's January 6th attack at the Capitol underscores the risks to democracy if states put more restraints on the ballot box. A change to the filibuster rule would require buy-in from all 50 Senate Democrats. Moderates Joe Manchin and Kyrsten Sinema have voiced reluctance, if not opposition, to changing the filibuster. In Washington, I'm Nathan Hager, Bloomberg Radio.
NASA's new space telescope is doing well more than a week after liftoff following a pair of problems that were overcome by ground control. controllers. Officials said today the huge sun shield on the James Webb Space Telescope is now fully open. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. A snowy Washington, D.C. Have we gotten any snow?
You can't tell it's dark, and I haven't been outside since this morning.
It's really dark.
Yeah.
But it's going to start getting brighter. Longer days. Just be patient.
Soon. Be patient. Wait for June.
I'm already thinking about it. So we've been talking a lot. If there's a theme today, one of the themes is, okay, the first trading day of the year doesn't necessarily indicate what the rest of the year is going to be like. In the meantime, at the same time, everyone is putting out lots of research and notes about maybe what happened last year, what it means for this year, lots of stuff coming out.
Yeah, Goldman is calling out active fund managers over some missed opportunities as well. Stock investors should avoid companies with greater exposure to wage inflation, with margins a key differential for 2022 after active fund managers missed out on outperformance opportunities last year. That's according to Goldman Sachs Group. Hey, active fund managers have a tough task ahead of them right now. It's making a lot of phone calls to clients saying why they didn't beat 27% in the S&P 500,
And why I
right?
should keep your money with me, right?
Am I right?
Yeah, well,
Really?
it's been hard to beat indexing at this point.
has.
And we say it over and over again, although we've had some stories that say, okay, maybe all of a sudden it's going to be, active. You're smiling.
Yeah, I'm like, well, stock pickers love to say it's going to be a year for stock pickers. Check out these numbers, Carol.
true.
Last year, 20% of large cap core mutual funds outperformed the S&P 500, compared with the historical average of 32%, while only 15% of growth mutual funds outperformed their benchmarks. That's according to Goldman. Value managers fared better, with 56% outperforming their style benchmark, compared with the average of 41%, according to the strategists.
Yeah, and it's interesting. Strategists starting off this year, far less clarity in terms of central bank policy, pandemic trajectory than they appeared to have last year. I mean, there's still a lot of wild cards, including inflation. What's interesting is I do wonder how much of it index funds is they've been outperforming, and so there's more money that just keeps to be propelling into index funds that push those indexes higher and those names higher. Like, you know what I mean? The self-fulfilling prophecy, essentially.
Yeah, you're absolutely
Indexing
right. I mean, the
prophecy.
inflows in 2021 were huge.
Yeah, so I don't know. Anyway, it's fun to see what these calls are, and we'll be obviously tracking them throughout the year. You're listening to Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Light volume, but records today in the first trading session of the new year. Records for the Dow, records for the S&P 500 index, a move higher for NASDAQ. Let's begin there. Up 1.2% today on the NASDAQ Composite Index, up 187 points. The NASDAQ 100 Index, full of tech names, up 1.1%. S&P up 30, higher by 0.6%. The Dow up 246, up by 0.7%. Records again for both the Dow and the S&P. Treasuries extended losses as traders brace for the start of a potentially volatile year, and 3 expected rate increases from the Fed. 10-year yield 1.63%. Spot gold down 1.5%, 18.01 the ounce. West Texas Intermediate crude oil up 1.1%, 76.05 a barrel. Cannot ignore Apple shares today. Apple's stock market value briefly rose above $3 trillion. The company is the first to achieve the milestone, although it failed to hold above that level through the end of the trading day. Apple did advance today by 2.5%. Recapping, 10-year yield 1.63%, S&P up 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with my co-host Tim Stanovic, here in our Interactive Broker studio. And our guest at this hour, still with us, is Whitney Johnson. She's founder and CEO of the talent development company Disruption Advisor. Her new book out, Smart Growth, How to Grow Your People to Grow Your Company. And she is on the phone in Lexington, Virginia. You know, Whitney, you work with a lot of companies that are very well known to our audience. Morgan Stanley, Estee Lauder, Citizens Bank, HubSpot, a lot more. Do you feel like companies in general get it, that things have changed forever? Or do you believe that things have changed forever when it comes to the relationship between employee and employer because of COVID?
I do think they get it. It's really interesting. There was a study put out by Aegon Zender just a couple of months ago where they had surveyed 1,000 CEOs. And they asked them the question about transformation, and they said 80% of them strongly agreed that they needed to transform themselves and the organization. 100% agreed. What's interesting about that is that prior to the pandemic, that number was only 26%. So it went from 26% to 80%. So I do believe that CEOs are now aware, if I want to transform my organization, I need to transform myself. I need to make it possible for myself to grow, and I need to make it possible for my people to grow. So, yes, people are starting to get it.
What does that look like? What does that actually look like? How does that manifest itself at companies?
Well, it starts, the fundamental unit of growth in every organization is the individual. And so it looks like manager, you, Tim, as a manager, you, Carol, as a manager, sit down and have a conversation with someone on your team and you say, where do you think you are in your growth? Here's where I think you are in this particular role. Let's come up with a plan so that you can get to the top of your S curve of learning and you can grow. Because what will happen is as you aggregate the growth of 5 and then 10 and then 1,000 and then 50,000 people, all of those people are growing, all of those people are reaching their potential, then they working together are going to be able to transform the organization. It's just starting with that fundamental building block of the individual.
It's interesting. Are there certain industries, certain companies, certain leaders that you've said that are like, man, they just get it, spot on, and they have figured out how to help grow their people, and it's really had an impact on their company?
Yeah, absolutely. In fact, I just interviewed a company, and we just highlighted them in the Harvard Business Review this month. It's the Sixers, the Philadelphia Sixers, the NBA team. They get it. There were 4 years where they were the losingest team in the NBA, and yet because they were focused on developing their people, Scott O'Neil, Jake Reynolds, Jill Snodgrass, they focused on helping their new recruits straight out of college learn how to sell, how to develop them. And as a consequence, in 4 years when they were losing all of their games, They were number 5 in terms of new season ticket sales, and then number 3, and then number 1, and then number 1. So you had a team that was not winning, and yet because they were willing to develop their people, they were able to sell tickets. That to me is a classic case of if you grow your people, you will be able to grow your organization.
Okay, so here we are. What is it? Day 3 of 2022. A lot of people are thinking about themselves in terms of, okay, what are the changes that I can personally make to feel better in 2022, to have a better year? What are some of the things that you can offer our listeners from your own practice of working with some of the biggest companies out there to transform individuals?
Yeah, I think the first thing that I would do is just recognize that each one of us, as I said earlier, growth is our default setting. We all want to grow. And if you recognize that as a leader, as a manager, and say to yourself, how am I going to help the people on my team grow? That is a great starting point. The second thing I would say is that whenever we're starting something new, and post-pandemic, we're all starting something new, we have to deal with a drop in dopamine. So one of the ways that you can counter that is to allow people to set very small, ridiculously small goals so that they can build momentum going into the year. And the third hack that I would suggest is for you every day, once you make a list of things you want to get done, make a list of 5 things. And if you're pacing well by noon, don't add to the list. Just say, good job, I got those 5 things done. And those 3 things put together, focusing on growth, building momentum, will allow you to, again, retain that locus of control, which is you, build momentum into the year, and start to feel like you're going to have some traction as you move throughout the year, and moving up that curve of your career and in your current role.
Any book that includes Star Wars and Yoda is definitely good in my case. But what's interesting, and I'm thinking about, Whitney, employees who are listening to you right now, leaders, which this is our audience, are listening to you. So what's the first step an employee can take in this growth process, and what can a leader do to encourage its employees in this growth process?
Yeah, okay, I'll give you a quick example. So a company called Chatbooks, they turn Instagram photos into books. The CEO, Nate, quickly came to us and said, we've got a lot of people. They're fantastic. They've been here a long time. I'm worried that they're not going to feel like there's opportunities for them to grow. And so we administered our S-Curve Insight tool, found that many of them were in mastery along the curve, but they now had a language to be able to have that conversation. In one case, one of the people said, there aren't any more growth opportunities for me in this particular organization. So they figured out a way for her to go somewhere else, which may feel like in the short term isn't a good thing, but long term, as we said earlier, they become an ambassador for you and your organization. The second thing I would say is that when you have this artifact of what growth looks like, it gives people permission to say, I am about to start something new. I have this language to talk about something new, and that something new is going to be awkward and uncomfortable, and I'm going to feel impatient and discouraged, but everybody knows that. So you've now normalized people doing new things. And so by having this language to talk about when things are new and uncomfortable, by having a language to talk about when people are feeling a sense of, I need a new challenge, there's this way to talk about it, normalize the experience, this emotional arc of growth. Right. And that is something that you as a leader can instigate, and you as a person working for that leader can do as well.
Yeah, figuring out how to have that conversation makes sense. Hey, Whitney, thank you so much. I really appreciate it. Whitney Johnson, CEO of Disruption Advisors. Her new book is called Smart Growth.
Let's get a check of what's going on in Washington, D.C., because Sound On with Joe Matthew is coming up in just a few minutes. Joe, Happy New Year.
Have you dug yourself out of the snow yet?
Yeah, literally just finished shoveling, so I got my workout. This is like a legit snowstorm. Shut down the government, which doesn't take a lot. But yeah, this is the most snow we've seen here in a while. And everyone's still talking about the same thing they were going into the holiday weekend, how much they're paying for everything. And meat prices are the story of the day at the White House. We'll talk to Heather Boucher, the president's economic advisor, coming up.
Did you find an infrastructure bill that was passed under all that snow?
Remember that?
All right, take care. Have a good show. Joe Matthew with Sound On coming up. That's going to do it for our first trading day of Bloomberg Business Week. Have a good evening, everyone.